Start of cash equity trading. I'm Francine Lacqua here in London, and here are your top stories. Global equities edge higher ahead of a key few days for central banks, with decisions expected from the Fed, the ECB, the Bank of Japan, and PBOC. Well, UBS completes the takeover of former rival Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis. It also creates a wealth management titan. Plus, the UK Prime Minister Rishi Sunak faces a new electoral headache after former leader Boris Johnson and two of his allies quit Parliament, triggering at least 3 by-elections. Now, this is a picture for the futures. I have to say it's going to be a big old week for a lot of investors across the world. We have not only a decision from the Fed, probably the most important one, as we also have asset managers across the world now starting to figure out what 10 consecutive hikes means for the economy in the U.S. and therefore the rest of the world. And then we have the ECB and PBOC further afield. So we are, for the moment, seeing a bit of gains across the board when it comes to a lot of these equity indices are just opening up. You can see IBEX over in Spain gaining 0.4%. Then we look at some of the sovereign bonds. The French 2-year yield at 3.08, UK 4.488. We also have the CBI coming out with better than expected forecast for the future of the UK. So it's not always all doom and gloom here in Great Britain. When we look at some of the commodity prices, I'm not only looking at gas oil, but actually Brent 74.01. We have a great story on the Bloomberg terminal, also on what OPEC Plus will do next. So let's also look across assets at what treasuries are doing, for example, and some of the other big ones. It will depend a lot on what central banks do, but for the moment, you can see also S&P futures gaining 0.2%, and then the U.S. 10-year yield at 3.7569. The other thing we're watching out for, as we're saying, is Brent crude, $74.02. So a huge week for central bank lies ahead. First up is the Fed, followed by the ECB, the PBOC, and the Bank of Japan. I'm joined now by Maria Munici, multi-asset fund manager at M&G Investments. Maria, thank you so much for joining us. What a week. I mean, I don't really know where to start, but it's certainly clear that something happened last week with a surprise from the Central Bank of Canada and the RBA. What are you expecting the Fed to do this week?
Well, I think, the expectation had been set for a pause for the Fed for this week. But obviously what we've seen happening in other areas, and Australia and Canada in particular, and the hikes that they've done, opened the way for a potential increase for the Fed as well this week. It very much remains to be seen. We still have some data coming in tomorrow, but it is certainly a very exciting time for markets. I think it's very important for the central banks that we know that they are being very data dependent, looking at what's happening, not only on the inflation side, but on the growth side of the situation, and in particular on the labor market. Labor market in the US has remained relatively stable. We're seeing some mixed signals, but all in all, it's still a robust market.
So Maria, what does it, when you take a step back and actually look at the markets, is the bet still on what happens with inflation? And is there uncertainty about the trajectory of inflation, given some of the core, CPI numbers that we've had?
Well, I think we are seeing that inflation is going down. The question is the speed of it overall, and in particular, what is going to happen to the core inflation number, and how is this going to behave in the coming months? Overall, what we've seen so far is obviously already quite an important increase in terms of interest rates in the US, but also more broadly across many major economies. And this should already start to have an effect in the coming months. The effect, as we know, is delayed. So we have to be, in this respect, patient to see what exactly is going to happen in terms of consumption patterns, in terms of resilience of expenditures from households, in particular in those economies that have a more important presence and sensitivity to interest rates of the housing market, like the UK, like Australia, for example, as well.
So, Maria, when you look at some of, for example, how you construct an ideal portfolio, do you go for regions or do you also go for industry groups?
Well, absolutely, there is space to consider all the different opportunity sets, both from a regional as well as a sectorial standpoint. Today, when we look at a multi-asset diversified portfolio, from a risk perspective, from an equity exposure perspective, the stance should be, in my view, a neutral exposure to market, but with a lot of opportunities to be selective and diversify. So choose those markets where today valuations are more attractive and where opportunities for growth are potentially not as high for or estimated as high from investors, and therefore there are potential to surprise to the upside. And in particular, we see in these areas, for example, in Europe, in some selected stock, we've seen actually some very interesting surprises so far this year in the Japanese equity stock market, which has performed extremely well. I think there are still opportunity for active selection there. Yeah. However, there is also, potentially an opportunity to scale back the overall exposure.
Maria, there seems to be this very strange thing that when you speak to chief executives or when you look at, predictors from central banks, is that a lot of them are expecting something to happen, but then you look at earnings and it's not quite there yet. Is there a problem of timeline, or have we almost, told ourselves that there's going to be a downturn which may never come?
Well, it's a very good question, and I think the market has settled at the beginning of this year into what could have described as a soft landing or no landing. So there has already been a shift from the end of last year when the fears were all about recession to what could have been actually a much softer outcome for the economy. However, there is still a lot of uncertainties on how this incredible increase in interest rates that we have seen is going to actually hit the economy and where. Yeah. Obviously, there are a lot of fundamentals that could allow economies to continue to perform well even at higher interest rates, especially given that we were starting from extremely low level already before the pandemic and even more after the pandemic. But nonetheless, the rate of increase is very important. And I think what needs to be considered from an investor standpoint is also how this different interest rate hike might affect different economies differently.
Yes.
Because not all economies are made the same way.
Yeah.
And so what might happen in the US might differ from, for example, what might happen in the UK or Australia or Canada.
Yeah. Also because we're in different cycles, right? So we started the hiking cycle when our economies were wildly different. So what do you worry about the most? If you look at the ECB, they've seemed to have so far, contained some of the fallout and done a good job. But then you have concerns in individual countries.
Yeah, absolutely. And I think, again, when you're managing a diversified set of countries, you have to be even more cautious about what you're doing in terms of your overall monetary policy. I think so far what we've seen in Europe has worked well. There's been a paced, slightly delayed relative to other countries, increase in interest rates. The economy has seemed to respond relatively well. You also did not have, to some extent, the same level of injection of liquidity at the start of the pandemic. You had it in different ways compared to the US. So there is a possibility that Europe has a more gradual approach to that in terms of interest rate hike and can go through this in a more smoother way, potentially, than what we've seen in the US.
So your conviction contrarian calls, most asset classes appear broadly. Is there something sell off right now? What's your most contrarian call?
Well, I think what we've seen in the last few weeks obviously there is some very important concrete reality about the importance of AI in the future. Seemed quite fast and so there is potentially there some opportunity for the market to retrace a little bit, but that is still to be seen in terms of how much of a vibe will this AI continue to be, or is it just a momentary setback from the strong focus that investors keep having around inflation and interest rate setting?
And then, Maria, I like the fact that actually UK gilts, following the huge sell-off or even shocks, some would say, that we saw last year, you think could look interesting?
Yeah, I think so, because as I was saying, I think different interest rate policies will bring different consequences in different economies because of the way they're structured. And in particular, when we look at the UK, we know that the rapidity in which the interest rate increase translates to the households through the houses market is actually pretty fast compared to other markets like the US. So despite even in the UK, we've seen a transition from flexible mortgage rate to fixed mortgage rate. We know that those are not very long in nature, so 2 to 5 years, and therefore the refinancing of this mortgage will come a little bit faster. So it opens the question of how much further can interest rates go in the UK despite the inflation problem, given the construct and the base of the economy itself.
Is there anything else that you'd like to have a look at in the UK?
Well, I think we're also seeing equity markets that are particularly cheap in the UK, but there is also a sectorial element to it, which has to be taken into account, obviously. But at the moment, I think the focus will be actually more on the sovereign side and some of the opportunities we're seeing there today with higher yields that we've seen in a long, long time.
Maria, thank you so much. Maria Winichi there, multi-asset fund manager at M&G Investments, getting us started for a really, really big week. Coming up, Hong Kong's government has applied for a court injunction to ban the dissemination of a protest song. Now, this will be reviewed on July 21st, but we'll discuss the potential ramifications of that next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 12 minutes into the European trading day. The picture across the board, we're seeing gains 0.4% higher for European stocks. It is a big, big week for central banks across the world. Now, Hong Kong's High Court is looking into an injunction submitted last week about a 2019 protest song. The government wants to ban internet platforms from hosting the song. Now, the court hearing will take place on July 21st. If that happens, Western firms such as Google may reconsider their presence in the finance hub. Well, joining us now for more is Bloomberg's Kari So Lindberg in Hong Kong. So, Kari, good morning, first of all, good afternoon. What is the Hong Kong government trying to accomplish with this injunction on the 2019 protest song?
Great, yeah, they're trying to ban the song from being played, disseminated, or distributed in any manner, especially on internet platforms.
So, Kari, why have they logged the injunction now?
So this really comes at an inflection point between the government and Google for the most part, where this song is being played at the most. So this happened in November of last year when the saga first started, when a South Korean rugby match played Glory to Hong Kong, the song that the government is trying to ban, instead of the Chinese national anthem by mistake. And since then, this has been repeated several times throughout the past several months, which is kind of now become an embarrassment for the Hong Kong government. So they are trying to put an end to this through this injunction.
So what are the broader implications for Western technology companies?
So the big thing, especially for Google, is really, do they stay in Hong Kong, especially when we see how broad the injunction is. When we finally get that hearing, we'll have more clarity on July 21st. But if this is a kind of a broad overreaching, this could really upend how searches are used in Hong Kong. And depending on how that works, perhaps Google may want to relocate out of the city according to a person familiar with the matter. And if that does happen, then they're looking to relocate some of their local employees outside the city, and they have around 500 to 600.
Kari, thanks so much. Kari Su Lindberg there in Hong Kong with the very latest. Now let's also get to the Bloomberg Business Flash with Sarah Halls in Dubai. Hi, Sarah.
Hi, Francine. UBS has reportedly completed the acquisition of Credit Suisse. It's the biggest merger in banking since the 2008 financial crisis. UBS agreed to take over Credit Suisse in March in an emergency sale brokered by the government after a confidence crisis and a flood of client outflows put Credit Suisse on the verge of bankruptcy. U.S. agribusiness Bunge is said to be nearing a deal to acquire Glencore-backed Viterra. Sources say the deal may be announced by Monday and that Bunge shareholders will hold a significant majority. The acquisition will create an agricultural giant large enough to take on Cargill and Archer Daniels Midland. Chris Bernaude's main hedge fund will be run by his co-manager Freddie Neve following his ouster. The London-based firm decided to remove its founder, who's facing fresh assault allegations. Meanwhile, the Financial Times says EU funds managed by Odie's firm are discussing restrictions on withdrawals amid fears of high outflows in the coming days. Illumina's board has accepted the resignation of CEO Francis de Souza, handing a victory to Carl Icahn, who had been seeking his removal. De Souza initially survived the activist investors' attack when he was one of 8 directors re-elected last month. Charles Dadswell was named interim CEO, while the San Diego-based gene tech company seeks a replacement. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Francine.
Sarah, thank you so much. Coming up, we'll have plenty more on the takeover, reportedly complete, and UBS becomes a reality. We'll dive into the next phase of Swiss banking. That's coming up next, and this is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This Wednesday, will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment. And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause, and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
It's the higher-end consumer, I think, that's feeling a little bit more nervous than the lower end.
There's this mountain of cash that consumers had on their balance sheets, and we see that starting to dwindle now.
People have confidence in continuing to spend money.
The data overall is pretty strong. Inflation remains persistent.
Something else will break between now and year end.
Key voices there that are saying the surging profit margins that help drive inflation will actually recede. Now let's get a look at the stocks on the moves this morning with Joe Easton from our equities team. Joe, it's exciting. I mean, it's a big day for the markets, but we'll start with Glencore. It's a big week for Glencore.
Absolutely, France. We've got the latest news coming up here on Glencore. Now, that stock is slipping slightly down 0.3%. We've had news today that Glencore is willing to purchase Teck's steel-making coal business. This is one part of the Canadian company that Glencore was trying to buy for around $20 billion. And Teck is willing to engage with Glencore, according to the company. Now, Glencore's own shareholders didn't really like this deal very much at all, but Teck's shareholders were pretty interested, and they've put pressure on the Canadian company to come back to the table. We look like we could see a bit more of a development on that one as the week progresses, Fran.
So we also have Novartis up there. I mean, there's quite a few stocks on the move today.
That's right. So Novartis, also an M&A one. They are buying Chinook in the US. This is for $3.5 billion. Chinook does a rare kidney disease drug, which, according to the company, is really needed among young adults. There isn't much treatment there. Now, they are willing to pay a 67% premium. This is at $40 a share. So Chinook shares are set to absolutely rocket in the US later. We're seeing a bit of upside in Novartis' shares. They're obviously more focused on cancer, but this could potentially be a new string to their bow and potentially boost that stock higher, Fran.
AO World, and Joe, I just found out it's London listed.
That's right. So AO World, the online retailer, they do things like dishwashers, televisions, all those electronic goods. Now the king of the UK high street, Mike Ashley, he's coming in and he's buying a 19% stake through Fraser's Group, House of Fraser, which also, of course, owns Sports Direct. They own a stake in Hugo Boss, Jeeves and Hawkes, Game Digital, lots of companies across the high street. And that is sending that stock higher today, up 4%. That's one of the best stocks we've got in London this morning. Mike Ashley giving some more hope to the UK high street.
And Joe, finally, Adidas, but we can't talk trainers or cool trainers. This is all about tax.
That's right. So they have got a bit of an upgrade. This is coming from Bernstein, as you mentioned, a bit of a tax element as well. But the broker Bernstein today saying that the development in terms of their branding is improving after, of course, they lost that partnership with Kanye West last year. Now, the most interesting thing to me is they say that Lionel Messi moving to Inter Miami will help their soccer business because Adidas makes these shirts for Inter Miami, and that could potentially boost their market share. And we're seeing Adidas rising 4% in Germany, as I say, mainly due to this upgrade by Bernstein. That stock fell 50% last year, given the Yeezy worries, but we're seeing it coming back up a bit today, Fran.
Joe, I was thinking of you on Saturday night, whether you'd be an Inter supporter or not.
Well, I quite like the branding with David Beckham, you know, getting the British influence there, and it's a pretty cool place to be, isn't it, Miami? Maybe I should take that as my, seeing as Chelsea aren't doing very well, maybe I should take them.
Yeah, I was thinking Inter Milan. We were almost there on Saturday,
yes.
almost, but not
Milan,
quite.
well, yeah, no, to be fair, I was actually hoping Milan would nick it, but...
Really?
Yeah, I've got some Man City sporting friends that won't be happy to hear that. But
I know. Live on TV, Joe, you're brave.
Yeah, I know. I might get in a bit of trouble.
As always, but worth it. Joe Easton there with the stocks to watch, and always a little bit of football on the side. Now, UBS shares edging higher after the lender completed its takeover of Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis. So the merger has been completed. Joining us now is Marion Haltofmeyer out of Zurich, who's been, of course, leading our coverage on the story. Marion, it's a deal. I mean, it's done at the start. I mean, this is kind of like a stamp of approval, but now starts the hard work.
Exactly. Now starts the hard work. Now is the day that UBS can formally go into Credit Suisse's offices and start controlling the business, and they've been preparing to do that. So deciding what business lines they want to keep, what employees they want to keep, and in particular what risky assets they might want to wind down.
So, Marion, I mean, this has been, 2 months of a lot of uncertainty for employees after UBS finalized the negotiations. Are we any closer to having a clearer picture of who goes, who stays, and what exactly, they plan to do with a lot of the businesses?
So for the moment, they've said, from day one post-merger date, everyone is a UBS employee. But of course, as time goes on, we will be getting more information on where exactly they'll be cutting costs, and that means job cuts. So there's a substantial question overhanging the Swiss business in particular, because there is a lot of overlap in Switzerland of employees who are doing very similar jobs. And if they do decide to merge the two Swiss businesses, that could be a lot of job cuts. We're talking about thousands here, tens of thousands. And then globally, same thing. They have guided the investment bank of Credit Suisse will be very diminished and downsized, and they'll be exiting some businesses there. So we should expect more announcements there as to where they'll be downsizing and where the bulk of the job cuts will be as well there.
So what do we know about adjustments to liquidity and capital requirements from regulators, Marianne?
So for the moment, they are on some schedules of capital phase-ins. They've been given a 2-year sort of leeway to get into the regulatory minimums on capital and liquidity because of the size of the balance sheet they are now going to have with all of Credit Suisse's assets and liabilities combining with UBS's. It does create this giant monster, and it's only fair in UBS's and the regulators' view that they get a bit of time to start winding that down and becoming a more well-sized, well-rounded bank.
All right, Marion, thank you so much for your great report. And of course, we'll have plenty more from Marion throughout the day as the team in Zurich with Marion try and figure out, of course, some of the fault lines going forward and how quickly we'll get into a resolution that's more concrete. So for the moment, a reminder, it's a big week. I know everybody knows, but U.S. and European, so U.S. equity futures and European stocks are climbing. A lot of investors, of course, are awaiting these interest rate decisions from the U.S., Europe, China, and Japan this week. Technology shares actually continuing to climb in the U.S. amid bets that the Federal Reserve is nearing the end of its hiking cycle. Coming up, we'll look ahead to the central bank discussions this week, and we'll try and figure out what path policymakers may take. This is Bloomberg.
that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional asset monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Global equities edge higher ahead of a key few days for central banks, with decision expected from the Fed, ECB, Bank of Japan, and PBOC. UBS completes a takeover of former rival Credit Suisse, sealing the biggest merger in banking since 2008. It also creates a wealth management titan. Plus, UK Prime Minister Rishi Sunak faces a new electoral headache after former leader Boris Johnson and two of his allies quit Parliament, triggering at least 3 by-elections. Now, for the moment, ahead of this big week for central banks, equities are holding strong. European stocks, you can see overall gaining 0.4%, the DAX gaining 0.5%, and we're also seeing similar moves for U.S. futures. Now, again, a lot of the week is packed with a lot of interest rate decisions from major central banks. So, spurt of deal-making news has also maybe given a little bit of a lift and boosted sentiment in equity markets. So let's also have a look at what sectors are on the move. I know we're looking in depth at Glencore from some news out of Glencore. Also, the Swiss industrial company, Jörg Fischer, offered to acquire finished plumbing equipment. So there's a couple of things out there that maybe means that there's a turning point or some kind of positive news coming from deal makers. You can see autos, retail, consumer products gaining 1%. Energy, basic resources, the ones that are actually losing the most. I think energy and basic resources are down around 0.9%. Now, it will be a pivotal 36 hours for markets later this week as monetary policy is determined for over 60% of the world's GDP. Yes, you heard me right, 60% of world GDP central bank decision in the next 48 hours or 72 hours. Now, the Fed, ECB, Bank of Japan, and PBOC are all set to deliver rate decisions. So for more, we're joined by Bloomberg Markets reporter Valerie Teitel here in London and Bloomberg European correspondent Maria Tadeo in Brussels. So Valerie, let's start with the Fed. What are we expecting? And again, there seems to be a turning point where suddenly investment managers are saying, right, 10 hikes. What does that mean for the economy going forward?
Yeah, 10 straight hikes in a row, a total of 500 basis points of rate rises from the Fed. And in just 2 days' time, they'll widely expected as the base case that they pause in their interest rate cycle. Now, that's the base case for the market they expect to do in the upcoming meeting in July. And then the other key thing will be the dot plot. We get their summary of economic projections. Within that infamous dot plot, which has the estimation for every central bank, every member for of the Fed for where they see the terminal rate at the end of the year. Perhaps if they want to communicate a hawkish message, we'll see a shift higher in that dot plot. And this makes it all complicated, more complicated by the fact we get CPI on Tuesday from the Fed out from the U.S. The risk is there if we get a really hot surprise, especially on those core metrics we know Powell is watching. It could cause an abrupt change of communication, and that's why there's still around 10 basis points priced in for this meeting on Wednesday.
Okay, this is the big one. And then, Maria, how different is the decision that the ECB needs to make compared with the Fed?
Yes, Francine, good morning. And well, when it comes to the European Central Bank, they've already downshifted from 50 basis points to 25 basis points. There's this idea that they've entered now the home stretch of monetary policy. And when you look to Thursday, the market, well, it has priced in exactly that. Yes to another hike, another 25 basis points. But the question, and this is really the focus for markets, is the future path, particularly when you look to July and what may be to come in that meeting. When you listen to the words of the head of the European Central Bank, Madame Lagarde, right before the quiet period, she did say there had been some relaxation in inflation, perhaps some relief, but yet to see definitive proof that inflationary pressures have peaked and are now in a sustained downward path. And that would be the key for the European Central Bank. And then when you look forward to the future, so far the consensus idea, as I said, is yes to another 25 basis points hike in June. So that is on Thursday. Then another one to come potentially in July, clock out for the summer, take a break, and reassess in September.
Yeah. Yeah, and Maria, I think it's all about the projections going forward, right? And whether it takes 12 months, 18 months, 24 months to really understand the hikes and the impact that's had on the economy so far. What do we know?
Yes, absolutely. And that is the lack of the monetary policy. Again, the European Central Bank has repeated also that idea that they want to see the forces of monetary policy really acting and kicking in this economy to bring down inflation to target, particularly with that focus on core inflation. We will get updated projections for inflation. Again, is that medium-term horizon, the 1 to 2 year. Can they get this sustainably down, especially given the volatile nature that we've seen with energy prices and the impact of headline inflation? And then, of course, you also have the GDP projections. We had that news of that technical recession in the euro area. Remember, there had been some hopes at the start of the year that it could be avoided. But of course, the writing had been on the wall, and that downturn of manufacturing, that continues to be a problem, particularly for the biggest economy in Europe. That is, of course, Germany. And those projections in terms of what kind of recession, will it be mild, just a technical short one, or actually are we in for a longer impact, will be key on the Thursday too.
Yeah, and then the other key one, of course, the BOJ, because we have a new governor in charge. And for the moment, the bond market is actually on his side. What are we expecting?
Yeah, this might be the easiest decision of the week out from the BOJ on Friday. Now, the market and economists are both pricing no change from their easy monetary policies. And that's down to two key reasons. As you mentioned, the bond market is just less distorted at the moment. There's really no reason to budge on yield curve control just now. And we're seeing some continued weakness in wages, which signals that this inflation that Japan has might not be stuck around for long, and that's their key worry right now. They really want to get inflation entrenched as opposed to the rest of the world who wants to get rid of it. And Bloomberg actually reported on Friday that BOJ officials themselves see little need to change policy at this meeting.
Valerie, thank you so much. Our Valerie Teitel, our Bloomberg Markets reporter, and Maria Tadeo, our Europe correspondent, joining us from Brussels. Now let's get straight to the Bloomberg First Word News with Sarah Halls in Dubai. Hi, Sarah.
Hi, Francine. The White House has acknowledged that China has spy bases in Cuba. According to a statement issued anonymously, the facilities have been in place for years and were expanded during the Trump administration. The Wall Street Journal has reported that the bases would allow China to eavesdrop on electronic communications throughout the southeastern U.S. Former U.S. President Donald Trump appears to be broadly holding on to his political base as he heads to court to face federal charges. A national poll suggests around 3/4 of Republican voters view the charges as politically motivated. Trump faces a 37-count indictment for allegedly mishandling classified documents after leaving the White House. He's due to face court in Miami on Tuesday. The air quality in New York City and Washington worsened on Sunday to unhealthy levels for sensitive groups as smoke and haze from Canadian wildfires linger over the northeastern U.S. After a brief reprieve on Saturday, the air quality started to deteriorate, falling to moderate in many regions in the northeast by Sunday. The smog is forecast to linger until Monday, when rain showers help cleanse the air. Former Scottish First Minister Nicola Sturgeon has been released without charge after being arrested as part of an investigation into the Scottish National Party's finances. Police confirmed she was questioned by detectives for several hours on Sunday before being released. An inquiry into SNP's finances is looking at whether donations towards the Scottish independence campaign were used for other purposes. Sturgeon said on Twitter that she's, quote, innocent of any wrongdoing. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Francine.
Sarah, thanks so much. Sarah Halls in Dubai. Coming up, the political drama in the UK continues. Boris Johnson quits Parliament, while former Scottish First Minister Nicola Sturgeon has been released after being arrested over SNP finances. All of that next, and this is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open, everyone. 41 minutes into the European trading day. The picture across the board, one of gains. You can see European stock 600 gaining some 0.4%. Similar moves across the board. Again, traders really trying to prepare for a big week, packed with interest rate decisions from major central banks. And then on the M&A front, we do have news that also supported a bit of this encouraging sentiment. Now, Chris Pinotti's hedge fund will be run by his co-manager, Freddie Neve. It follows a decision by OD Asset Management to oust the founder, who's facing fresh sexual assault allegations. OD has denied these allegations. Well, joining us now is Nishant Kumar, our hedge fund reporter, who I know has been working tirelessly all weekend, despite the good weather in London. So, Nishant, what's happened over the weekend?
It was a busy week, and not only for us, but surely for all the partners at OD Asset Management. This weekend has marked sweeping changes at the firm. It started on Thursday with the news of fresh allegations against Mr. Oti. On Friday, a lot of service providers as well as investors started to go out, desert OD Asset Management, and really the firm had to take some swift and decisive action to contain the damage. So on Saturday, it basically used the nuclear option of removing its long-term founder, Crispin Odey, from the partnership. And since then, they have taken further steps like giving his hedge fund and a few other funds managed by him to his deputy and other portfolio managers at the firm.
But will it help stabilize the hedge fund firm, Nishant? Or are you hearing of people actually pulling out their money and kind of a lot of questions being raised?
So we have reported Schroders and Canada Life have already pulled the money. And, anytime something like take the action from investor side and ask questions later. So every firm suffers from this kind of stampede when such a crisis erupts. But it's all moving in the expected direction at the moment. Look, the bottom line is that all the problems and crisis of confidence is around Mr. Odey. While it doesn't affect the day-to-day running of the funds, the way portfolio manager invest their capital, investors would like to get some kind of reassurance, and that's what the investment firm has done. We really need to see if OD Asset Management has gone far enough to win back clients and service providers.
All right, Nishant, thank you so much. Nishant Kumar, there are hedge fund reporters who, of course, been leading on many fronts with some breaking news out of the Odey situation. Now, the UK's political drama is ramping up. The former Scottish First Minister, Nicola Sturgeon, has been released without charge. She was arrested over the weekend as part of an investigation looking at whether donations for the SNP's independence campaign were used for other purposes. Meanwhile, the former UK Prime Minister, Boris Johnson, dramatically resigned from Parliament on Friday, triggering at least 3 by-elections and posing an electoral headache for current Prime Minister Rishi Sunak. Now, for more on all of this, we're joined by Bloomberg's Lizzie Burden. Lizzie, I mean, what is going on in UK politics? It was like a dizzying weekend almost. Tell us more.
Yeah, I was glued to my phone all weekend watching Twitter. It really seems like the timing of Boris Johnson's resignation was designed to inflict the maximum damage on Rishi Sunak, who, of course, he blames for his own downfall. He said that he's exiting politics for now, so hinting of a comeback down the line, he hopes. It reflects that hasta la vista baby that he said in his resignation as Prime Minister, the indication that Boris Johnson will be back at some stage. There is a comparison that I think is overdone sometimes with Donald Trump. And of course, the federal indictment charges against Trump came on the same day as Boris Johnson quit. The big difference really is that Johnson seems to be isolated within his party now, whereas Trump only seems to be bolstered by all of this scandal within the Republican Party. But the big picture is all of this distracts from the diligent government that Sunak's trying to present. And you mentioned those 3 by-elections that this triggers. If Sunak loses all of those in a day, it's going to be extremely politically embarrassing. You've already got the Labour Party calling for a general election. I know you're speaking to Keir Starmer later. All the polling suggests, well, even the most recent polling suggests that Labour would win by a landslide. But you've also got this problem that you mentioned north of the border, Nicola Sturgeon. She was arrested. She was released later, a few hours later. But it speaks to this sense of implosion within the SNP. So that would be to the benefit of Labour. And that means, it would damage the Conservatives. So Rishi Sunak's got an eye not only on the by-elections, but also on what's happening north of the border.
So, Lizzie, I mean, there is so much going on. And, of course, this can't help UK PLC. I mean, they just need, if you're a company, you want to invest here, how does this political landscape, make it that much harder?
Yeah, because the last thing that businesses want is instability. And this is exactly the topic of our big take today. Britain Adrift is the accusation levelled at the government after business leader over the past few weeks and months. It's all together in this long read on the terminal. The government would argue that it's focused on fighting inflation to create a foundation for growth. Rishi Sunak's been in the US trying to shore up economic ties. They're pumping £1 billion into semiconductors. But that pales in comparison
to what the US is doing with the Inflation Reduction Act and what the EU is doing in response. So there's a lot of persuading to do that the Conservatives remain the party of business. I'm going to be speaking to the Deputy Prime Minister Oliver Dowden at Founders Forum this week, asking him this question: is Britain open for business? What is the plan for growth? And that'll be on the UK Politics podcast on Friday.
Thank you so much. A great roundup, of course, of really the dizzying news that we've had from the weekend. Lizzie Burden there. And we will, of course, push our, everything on social media for our big take. Coming up tomorrow, we'll also be speaking to the UK opposition leader, Keir Starmer. That's at London Tech Week. Now, the focus, of course, on this conversation is the key opener tomorrow morning. London Tech Week actually opens today. The focus is on AI and maybe some of the regulation, but we'll, of course, have to touch on politics and how he'll regulate all of the environment if he comes into power. That conversation, 9:30 a.m. UK time tomorrow morning. Coming up, the EU could be considering an unlikely source for help in avoiding last year's gas price surge. We'll bring you the details next. And this is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 51 minutes into the European trading day. For the moment, we're holding strong. It's very clear that it's a big, big week for central banks. We not only have the Fed, the ECB, but we have PBOC and Bank of Japan. Now, here's what else we're watching out for this week. UK Tech Week kicks off today, which brings together founders, top business leaders, policymakers, and investors to discuss issues including AI. On Tuesday, we'll get UK employment data and US CPI. The Fed's decision comes on Wednesday. On Thursday, we'll get the ECB's decision and China's MLF rate. Finally, on Friday, we'll get the BOJ's decision. Now, the Ukrainian government says its troops have liberated at least 2 villages in the eastern part of the country. It's part of the first wave of the long-awaited offensive to take back Russian-held territory. While Ukraine's gains have not been independently verified, Russia calls the military situation fluid. And as fighting in the east of the country rages on, Bloomberg has also learned that the European Union could be considering supporting links to a gas storage facility in the west of Ukraine to prepare for the next winter. The bloc actually hopes to avoid panic-driven price hikes of last year. Well, joining us now is Bloomberg's Rachel Morrison, who leads all of our coverage for not only Ukraine but Western energy. So tell us a little bit more, Rachel, about this gas storage facility. Why could it help next winter?
So the gas storage facility is similar to the ones that we have in Europe. And because prices have dropped so much this year, really, Europe's gas storage levels are much higher than they usually are. So traders are kind of anticipating that those will be full before the end of the summer. At that point, prices could drop even further. And we're hearing people talking about possibly taking gas from Europe and putting it in storage in Ukraine. So that's extra storage we don't normally have access to. And companies have done it in the past. And, you know, it's a great trade because ideally you buy at a very low price in Europe and then take it back out of storage when prices potentially are higher next winter.
It seems risky given it's in the middle of a war zone.
Yes, I mean, it is, as you mentioned, in a different part, you know, hundreds of miles away from the war zone. But, of course, anything can happen. And that is the risk. That's the main risk, that, you know, it could be damaged in some way. But it seems unlikely, and that's sort of what's making people think that it could be a useful thing to do.
Yes, yeah, so I guess it depends on whether Russia wants to target it, because it is far away. I mean, I'm not like, you know, operationally, tactically, you know, au fait of how that would happen. But what would the EU have to do to make it workable?
Well, we know that insurers are not in Ukraine anymore. So companies are looking for some sort of guarantee from the European Union that will mean that it just makes it a bit safer, a form of insurance, really. So we know that the EU is talking about that. In the past, when companies have stored gas in Ukraine, that hasn't been necessary, so it hasn't really been done before. But a lot of companies are saying that they would need that in order to do this, that it is important.
Rachel, put everything in perspective for me. So I remember last October, November, when people were really afraid of it, you know, being the end of, you know, what we know as good economics just because of the price. Were we lucky because there was mild weather, or has Europe been really good at actually finding alternative sources of energy?
It's a bit of both, really. Most people in the market say that the mild weather was really helpful to the whole situation. And we do hear a lot of warnings about next winter and the fact that we are missing a big chunk of supply from Russia. So if the weather is cold, as you would expect, you know, usually happens, then we are going to need those extra stores, which is why Ukraine is looking like an interesting option.
Rachel, when you look at some of the complexities going forward of energy, has Europe done more than you'd expect it to?
I think one of the things that's been surprising is how quickly Europe has set up different routes for gas, so LNG, and we've also been lucky in that there hasn't been huge demand from China, so we are getting those cargoes of LNG. And that's another sort of big factor that people are watching out for. What happens if Chinese demand does come back? If it gets really hot in Asia, you know, we will get less of that gas. And while that's fine in the summer, in the winter, it's a bit more of a problem.
Rachel, thank you so much, as always. Rachel Morrison there, who leads our coverage into energy. Now, we're also getting a bit of breaking news, or actually we had in the last 40 minutes or so. It was widely expected, but this UBS Credit Suisse merger has gone through. Now, what this means is that operationally, then we can get on with actually building this huge asset manager. So they completed the acquisition of former rival Credit Suisse, seeing the biggest merger in banking since the 2008 financial crisis and creating this global wealth management titan. We were speaking to our Marion Haltefmeyer, who's been really leading all of our efforts in Zurich. Again, there are a lot of questions about regulatory, how much money they need in terms of lifelines, and of course, we still don't have a definitive answer on how many jobs will be lost. Now, we'll also be talking to the man leading Google's AI efforts. DeepMind's chief executive, Demis Hassabis, joins us for an exclusive interview a little bit later on this morning. I think he'll be on with Tom McKenzie. This is Bloomberg. what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures, running empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. European equities edge higher ahead of a key few days for central banks, with decision expected from the Fed, the ECB, the Bank of Japan, and the PBOC. UBS completes a takeover of former rival Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis. It also creates a wealth management titan. Plus, a new electoral headache for UK Prime Minister Rishi Sunak after former leader Boris Johnson and two of his allies quit Parliament, triggering at least 3 by-elections. We'll discuss the political fallout and also explore Britain's deteriorating investing climate. Now, good morning, everyone. Let's check on the markets. Because it's a big week for markets overall, there's, of course, a lot of concern or a lot of questions about what central banks will and won't do. The BOJ on Friday probably seems the most straightforward. This is because bond markets, for the moment, are on side with the new governor for BOJ. The other question is what happens to the Fed. You tell the markets one thing, and they interpret it as something else. We had 10 consecutive hikes. What does that mean going forward? Are they going to wait? Which is why they expected to see the impact of interest rate hikes for, of course, the economy. European stocks for the moment gaining 0.6%. The U.S. 10-year yield 3.7627. Now joining us to talk about all of these markets, Ian Steely. He's J.P. Morgan Asset Management's International Chief Investment Officer for Fixed Income. Ian, what a day to have you. I mean, what a week. It's going to be crazy. Are you ready for it?
I think so.
Yeah.
No, obviously, lots going on. Inflation prints, central banks.
There's a lot. I mean, a new ECB print in terms of forecasts going forward. What does it mean for fixed income? Is now the time to load up on treasuries?
We've had a nice repricing over the last few weeks as the market has priced out some of those cuts that were booked in for the second half of this year. So from a valuation standpoint, definitely looking a bit better than we were, say, a couple of months ago. I think the big question, of course, though, is going to be around the Fed. And if the pause, how hawkish is that pause? And then, of course, we've got some inflation data, which is going to be important as well, to even before that Fed meeting. So I think a lot of it is dependent on the inflation print. A lot of it is dependent on what the Fed has to say, and Jerome Powell has to say, particularly in the press conference. And I think markets will probably take some direction from that.
Ian, how hawkish do you think that pause will be? And again, the market, always understands something else. They keep on telling them that for the moment they're that they want to raise rates, or if not raise rates, certainly they're very vigilant on inflation. But the market keeps on interpreting it as something else.
I think the market at the moment has got its head around the fact that they are going to pause. I think Jerome Powell's been very clear about that, and then we've obviously got a hike priced in in for the July meeting. I think what will be interesting, again, from a dot plot standpoint, where do we think we're going to, where do the Fed think they're going to end the year? Is it going to be that maybe an additional one? More than that will be obviously seen as hawkish and negative for bond markets. But I think really, I think the bigger picture as we take a step back, we've done a huge amount of hiking over the last 15 months or so, and we are starting to see cracks occurring, albeit maybe a little bit slower than people had felt. And it does feel like we're towards the end game. We're definitely closer to the end than we are the beginning, which ultimately means from a long-term perspective, fixed income is looking attractive.
But then we heard actually from Larry Summers saying, look, the economy is hot, hot, hot in the US.
He did say it was hot, 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 but he also said it's not as hot as it was 6 or 12 months ago. So that's what we're seeing come through. We are seeing the data slowing. Obviously, I'm not going to just use one initial jobless claims print, but the jobs market is important. We obviously had pretty weak print on Thursday, and it doesn't look like some of the uncertainty around that number as it was a couple of months ago with Massachusetts. It looks like that is a reasonable print. So I do think we're starting to see slowing. It's just, are we slowing fast enough for the Fed when they are very concerned that they pause too early and inflation becomes embedded and it doesn't get back down to target?
Did the Bank of Canada and the RBA last week actually pause and make you think? Did it change? If it didn't change what you're expecting from the Fed, did it question what you're expecting them to do?
I don't think it really had an impact on this meeting. I think when you look at Canada, Australia, Norway's being thrown out there as well at the moment, they all stopped a lot earlier than the Fed did. The Fed's done a lot more, particularly in the case of Australia and Norway. So I feels that, yes, you probably do need to take some consideration into the fact that they paused and then had to go again. But I think the Fed has done a bigger slog, from the beginning than they had.
We also have the Bank of Japan. Is that maybe the easiest, actually, out of all the meetings, given bond markets for the moment are supporting the governor?
Probably, but it probably shouldn't be either, because when you look at the inflation prints in Japan, depending which measure you take, we're somewhere between 3% and 4%. Negative interest rates, yield curve control. It doesn't really make sense. Are they going to do something? We've definitely been led down the path that they're not, although I would argue that we were led down that path in December, and the way for the Bank of Japan to change policy is to really rip the Band-Aid off and do it when the market's not expecting. So let's not completely rule anything out on Friday, and I think they definitely should be doing something, or at least be thinking about doing something.
It's interesting. It's an outlier call, right? Not many think like you.
Well, I think a lot of people think that the policy isn't really in keeping with where the economy is going, but we've obviously had such clear direction from the Bank of Japan that they're going to keep with it. It's very difficult to fight that. Although, as I say, the time to make those changes is when no one's expecting it.
What about ECB?
I think the ECB is probably the easiest decision, because they still have an inflation problem. We have thankfully seen core inflation come down over the last couple of months, but it's still far too high for them. They've given very clear guidance. They expect to raise rates by 25 basis points, probably over the next couple of meetings. The market's fully on board with that. That's fully priced in. I think the problem the ECB's got is more further out, because obviously we've had a couple of negative quarters of growth in a row. When we look at some of particularly the manufacturing PMI data, it's looking a bit challenging for Europe at the moment. And again, they don't want to make the mistake of forcing that recession to keep inflation under control, when inflation might be coming down off its own back with slowing growth. But core inflation is too high at the moment for them.
But at the same time, I think they may have other problems, right? It could be TLTROs, it could be the Italian banks because of widening of spreads. Is there anything now that they can do to try and temper that?
I think they've been very clear that they're going to support peripheral government bonds. They're going to use the policies that they've already put in place if required. I think what's actually been fairly maybe surprising to a lot of people is how well peripheral spreads have held in over the last few months and the hiking cycle. And actually, the European market seems reasonably steady at the moment. I think it's really going to be just a case of that.
So how do you? I'm going to ask you about PBOC and actually whether we will see something significant and how you play that on the markets.
It's difficult to see something really significant from the PBOC. I think they've continued over the last few years to put support in place as required, and it does look like we're going down that route. Are you going to see major rate cuts? That isn't normally the policy that they put in place, but I wouldn't be surprised if you see some specific specific help from them. But I think really, it's more the major central banks that the market is focusing on at the moment.
Okay, Ian, thanks so much. You're going to have a busy week. A lot of coffee. I hope a lot of espressos to keep you going. Ian Steely, JP Morgan Asset Management's International Chief Investment Officer for Fixed Income. Now, London Tech Week starts today. Will be a couple of days. Our time to be speaking of DeepMind. He understands more than anyone, of course, what happens with AI. Let's head over to London Tech Week now, where the UK Prime Minister Rishi Sunak is also speaking.
Not only to retain our position as one of the world's tech capitals, but to go even further and make this the best country in the world to start, grow, and invest in tech businesses. That is my goal. And I feel a sense of urgency and responsibility to make sure that we seize it. Because one of my 5 priorities is to grow our economy. And the more we innovate, the more we grow. But this isn't just about economics. Like you, I believe that innovation is one of the most powerful forces for transforming people's lives. And right now, there is an opportunity for human progress that could surpass the Industrial Revolution in both speed and breadth. I believe the UK can achieve this goal because we start from a position of strength. We've created 134 unicorns in the last decade, 3rd in the world, behind only the US and China. We're one of the most digitally literate societies in the world, with a higher percentage of STEM graduates than the US, and 4 of the world's top 10 universities. We've got extraordinary strengths in fintech, cyber, and creative industries, and engineering biology, where from the Crick and the Biobank to DeepMind's AlphaFold, we're pushing at the boundaries of what is possible in health. And the UK is the best place in Europe to raise capital, with more invested in tech here than in France and Germany combined. But today, I want to answer a simple question. What's the single most important reason innovators like you should choose this country? The answer is leadership. Do you trust the people in charge to really get what you're trying to do? With this government and with me as your Prime Minister, you can. Judge us not by our words, but our actions. It's this government that's building the most pro-investment tax regime, that's increasing public R&D investment to record levels, that's making our visa system for international talent one of the most competitive in the world. We're overhauling our listing rules to make it easier for companies to raise public funding and changing our pension rules to unlock new private capital. And we're changing the way government itself works. I created a brand new department focused on science, innovation, and technology, with a mission to do things differently, from bringing in world-leading experts to taking more risks in support of innovation. And when the moment came, it was this government that acted to rescue Silicon Valley Bank. Today, I'm proud to announce the launch of HSBC Innovation Banking, the most significant global tech bank, combined with HSBC's firepower and headquartered here in the UK. And of course, it's the UK where Google chose to bring together its entire AI division under the leadership of a Brit, Demis Hassabis at Google DeepMind. And if our goal is to make this country the best place in the world for tech, AI is surely one of the greatest opportunities before us. As Chancellor, I doubled the number of AI scholarships, because even back then I recognized the potential of AI as a general-purpose technology. Now, with most things in life, the more you learn about them,
We'll keep a very close eye, of course, on anything that happens in London Tech Week. Rishi Sunak also about to have a conversation with the DeepMind founder, Demis Hassabis. And then, of course, probably in that conversation, he'll also address some of the defeats, bruising defeats, that the Tories had last weekend or on Friday because of Boris Johnson. Coming up, we'll look ahead to the central bank decisions this week, including the Fed and the ECB. This is Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think they're much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment. And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
So it will be a pivotal 36-hour for markets later this week as monetary policy is determined for over 60% of the world's GDP. The Fed, the ECB, the Bank of Japan, and PBOC are all set to deliver rate decisions. Now, for more on all of this, we're joined by Bloomberg Markets reporter Valerie Teitel here in London and Bloomberg's Europe correspondent Maria Tadeo in Brussels. Thank you both for joining us. Valerie, if we start with the Fed, what are we expecting? And actually, is this the time where we pause because we need to figure out what the 10 hikes mean?
Yeah, the 10 hikes and the 500 basis points the Fed has done in less than 14 months. But the base case for the markets and for economists is that they do pause in their rate hiking cycle here. But the key for the markets is going to be what kind of short-term guidance is Powell going to give and what is going to be reflected in that dot plot. It's interesting to note we've seen in the last month the first real hints of a division at the Fed. There's been a lot of chat and what kind of things does Powell have to do to appease the hawks in order to prevent a dissent. Remember, Powell has done a phenomenal job in this rate hiking cycle in preventing dissents and having everyone on his side, but we might start to see cracks in that kind of consensus start to form from here. It could possibly get him to sound more hawkish in the press conference or perhaps give it more of a direct steer to hikes in July.
Valerie, thank you so much. We'll get on to also what we're expecting from the ECB, but now let's head back to London Tech Week, where the UK Prime Minister is hosting a fireside chat with the DeepMind Chief Executive.
Science and medicine, the energy transition, and improve the lives of billions of people. So, Prime Minister, I was wondering, what do you think are the biggest opportunities for AI to make a positive impact in the UK?
Well, first of all, thanks, Demis, for having me, and congratulations on everything you're doing. I think if I think about it, there's the obvious economic one. Yeah, I talked about AI being a general purpose technology, and this idea of every job essentially having AI as a co-pilot, just making everyone's job a little bit easier, a little bit more productive, and that replicated across an entire economy obviously has enormous potential to change how we do things. So I think that's probably the first one. Beyond that, in public services, health and education, I think in health, we're already seeing the promise of what AI can do, whether it's new drug discovery or helping doctors do surgery more accurately and faster, or indeed detect cancers and other things much earlier than they otherwise would. And we're just at the beginning of the innovation that's happening. There's something you know well with AlphaFold on the drug discovery side. So that, to me, seems potentially transformative. And education is the thing that I'm most excited about because it's the thing I'm most passionate about. I always say, look, there's not many things that are silver bullets in public policy, but world-class education is probably the closest we have to it. It's the best way to spread opportunity, to reduce inequality, and the power of AI to reduce teachers' workloads and burdens, lesson planning, marking, but also to provide personalized learning for each individual, which we know when it comes to tutoring is so powerful. Now, technology, holds out the promise that every pupil, every student, having a personalized tutor, I think that potentially is just extraordinary in terms of the good it can do. So those are probably the things that I'm most excited about.
Yeah, that's fantastic. I mean, I agree with all of those things. And I think this is the potential, actually, specifically in the UK and also London, of fusing together AI with all of the great strengths we have in many other sectors, like fintech and biology, like you said, gaming, all of these other sectors where AI, I think, can have some massive transformations. So how do you think the UK, we can make the UK the best place in the world to both start and scale up tech companies?
I hear this a lot. I think the first thing to say is we're already a great place to scale up a tech business. And I mentioned the stat in my remarks. If you look at the last decade, more unicorns in this country than anywhere other than the US and China. So I think that's a pretty good record and a good base for us to start from. But obviously, we need to keep doing more. We need to keep pushing ourselves. The first thing is people. I think there's an extraordinary stat. Something like half of all of our fastest growing innovation businesses have a foreign-born founder. So that tells you need a visa system that attracts the best and the brightest to the UK. And I think we've got one, whether it's the new scale-up visa that I introduced as Chancellor for companies who are scaling up to be able to get the talent they need, whether it's our innovator founder visa, which is globally extremely competitive, or the high potential individual visa that I created, which essentially says if you graduated from a global top 50 university, just come to the UK. You don't need a job offer. We just want to make sure that you can speak English and that you have a certain amount of money to support yourself. But otherwise, we just want you here because we think it will be additive to our economy. That's a massive we're open for business sign to the world's most talented, and I think that's important. Capital, look, we're closing the gap. If you look at VC funding as a percentage of GDP, whereas we had quite a big gap towards it to the US 5-7 years ago. That gap is steadily closing. The Chancellor's making a ton of reforms in pensions, insurance industry to unlock even more capital. The thing I'd love to get your thoughts on, though, actually, is culture. Because I took that from my time living in California. You obviously know that well as well. Yeah. And the government can do all these things, but fundamentally it requires the entrepreneurs to just keep going, to be not content with building the £100 million business and then the £1 billion business, but just to keep growing. And that I found in California is very much the attitude. It's just the sky is the limit. Everyone thinks they can create a $100 billion company, and actually, changing that culture is tough for government to do. But I don't know what you think about that. Yeah, that's a harder bit.
I totally agree. I mean, I've seen the whole.
Well, later this morning, you can also watch Tom McKenzie's exclusive interview with the DeepMind Chief Executive Officer, Demis, one of the most brilliant minds actually out there when it comes to AI, and also real understanding of where we end up on AI. He, of course, leads now Google's AI efforts. And tomorrow, we'll also be speaking to the UK opposition leader, Keir Starmer, from London Tech Week. Don't miss that conversation at 9:30 a.m. tomorrow morning. Coming up, the takeover is complete. The new UBS becomes a reality. We'll dive into the next phase of Swiss banking next. And this is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, UBS shares edge higher after the lender completed its takeover of Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis. This was widely expected, UBS gaining 1%. Coming up, only 15% of board members say they understand the risks and benefits of using AI technology. We'll be talking to the CEO of Diligent.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
European equities rise ahead of a key few days for central banks, with decision expected from the Fed, the ECB, the Bank of Japan, and the PBOC. UBS completes the takeover of former rival Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis and creating a wealth management giant. Plus, a new electoral headache for the UK Prime Minister Rishi Sunak after former leader Boris Johnson and two of his allies quit Parliament, triggering at least 3 by-elections. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, AI and emerging technology risk were the most discussed terms by directors over the past 3 months. That's according to a survey by governance, risk, and compliance company Diligent. Let's find out more with Diligent's Chief Executive Officer, Brian Stafford. Brian, thank you so much for joining us. I mean, first of all, AI is all-encompassing. It's everywhere, and it could change the way we work and live. Is it wrong to think about it as we need an AI specialist on the board, or does every manager need to become an AI specialist?
Yeah, it's a great question. AI, as you noted, has been the hottest boardroom topic, and every board is discussing how you apply it, what's the risk of it, how are the opportunities. Most boards that we talk to are not specifically focused on adding an AI expert to their board, just making sure they can up-level the skills for all the directors and management around AI.
I mean, AI is everything and anything. What are the top 3 concerns that you would have on how we regulate? Is it cyber attacks, or is it actually job displacement?
I think when you look at the top 3 issues associated with AI for companies, everybody's focused on the impact it'll have on jobs. Everybody's focused on whether you'll retain jobs, how you'll increase the productivity of those roles, et cetera. And you're seeing a good number of companies freeze hiring because they expect that incremental productivity. Yeah. There's also risks that come with it. There's the ethical risk around how will you deploy it and use it within your environment. And lastly, it's a risk of other things, from increased phishing attacks, cybersecurity risks, et cetera. It's going to change the game in the way threat actors interact with companies.
I mean, is there a danger that because it's going to change everything, you have boards and companies that go into inertia because they don't know where to start?
I think when you look across different organizations, and I was just at a large event with a very large number of Fortune 100 CEOs, and everybody first and foremost believes that there's an opportunity to deploy AI in their organizations to increase productivity. Yeah. Where you go beyond increasing productivity and the impact it has on new product innovation, et cetera, I think there is a bit of wait and see. You'll see some tech companies move really, really quickly, but other companies wait and see what impact it will have and look at different ways to experiment and deploy it in small ways.
But do you think, I mean, automatically it actually helps with productivity? That's what we were saying about, the internet, the World Wide Web, and if you look at a lot of models right now, it's unclear whether it has helped with productivity.
I think if you look at the new language models and generative AI, I think most organizations believe it will have a material impact on productivity. And it'll have a material impact on productivity over the next 12 plus months, whether it's in your marketing department, whether it's in sales, whether it's across some of your G&A functions. Yes, I think most CEOs believe that it will have a material impact on productivity.
Should they start thinking about, okay, productivity as long as we don't have fake news or fake algorithms or actually all the bad stuff, including inequality that could come with AI?
Look, I think there are risks and threat around AI. Right now, today, if you look at, we all come across phishing attacks in emails and other conversations, but you're going to come across phishing-like attacks and cyber attacks from generative AI that's going to spoof and sound like people you work with. And so I think there is real risk. But if you look across most organizations, you can tend to deploy AI in relatively conservative ways to increase productivity across your business, and that's where I think you'll see organizations move first.
Brian, one of the other things that we talk a lot about, deglobalization, a new form of capital. Do we need to start having non-financial metrics to measure companies? Or is that impossible because every company is doing their own thing, so it's difficult to actually evaluate them on par?
Yeah, I think it's a great question. Stepping back from AI, I think we're entering into a very interesting time in corporations' existence, where previously the metrics that most companies looked at and focused on were just financial metrics. Now you're seeing in Europe and other places outside the U.S. of an increasing number of non-financial metrics, whether it's climate disclosures, whether it's carbon in particular. And I think you're entering a world where companies have made commitments around how they're going to change the way they operate beyond just profitability. And now you're going to see companies have to disclose a set of metrics around that, and then everyone in the press hold those companies accountable.
But that would be what, for better hiring practices, or because if you still get the money, right, from shareholders, it doesn't have that much of an impact on the way a lot of the companies behave going forward.
So I think you'll see shareholders who are obviously focused on returns, but you'll have other shareholders that are focused on other metrics as well, whether it's talent, diversity, climate, the impact that you have on your on the broader set of stakeholders. And I think we're operating in an environment as well, and we saw that through the Great Resignation, where also your employees want to work for organizations that actually hold the same values, and also your customers want to buy from organizations that hold the same values. So how, as your organization, do you share information about your values? And I think that's going to come from an increase in non-financial metrics.
I mean, I guess values at the moment are ESG. It's, you know, possibly flexibility of working from home. Does AI come into this on how companies use AI and whether this matches my values?
I think AI is going to have, as we talked about, a material impact on productivity. And I think how companies use that AI on productivity is going to come right back and impact the values of your employees and how they see you deploying AI. Do they see you employing AI in a way that not just drives productivity, but also improves the quality of work? But organizations are equally focused on driving productivity from AI.
Well, if you look at the ideal company, how do they think about all of these different subsections? So it could be AI, it could be climate disclosure, and some of the big things going forward. I don't know whether they need to think about not becoming Kodak, right, not disappearing, or whether, you know, they need to think about trying to lead from the front.
Yeah, it's a great point. At Diligent, we work with 25,000 organizations, and 700,000 board members use our application. Yeah. And I would say across all the board members use our applications and the dialogue they have in boardrooms, it's a right balance of how do we deploy things to make sure that we move forward and can actually push forward on productivity, on innovation, while still being conservative enough and practical enough where you're not creating more risk to your organization.
I mean, talking about timeline, again, there's something called the Mara's Law, which I keep on reminded quite often, is that we sometimes overestimate the impact that something has in the short term, but underestimating the long term. Or is this the case?
I think it's exactly right. And you hear this used many times over, whether it was the internet, the shift to mobile. I think people are very, very hyped about the impact of AI today. But I think what you're going to see over the course of the long term is real material productivity shift and innovation for companies.
I think the Citadel founder was warning everyone last week not to overhype the switch to AI. Could it become like a metaverse moment where everyone was talking about metaverse and then, you know, we quickly go on to the next thing? Or is this something that's really here to stay and really change our behavior?
I think the dynamic, or where I separate the two, are in two different ways, which is, one, from CEOs, you see there is real opportunity over the course of the next 12 to 24 months to drive more productivity across your business. I think that is very real and true. How much new innovation, product, et cetera, I think you'll see more hesitation and balance as people, you know, trade off that metaverse moment.
All right, Brian, thank you so much for joining us. Brian Stafford, their Diligent Corporation's Chief Executive Officer. Coming up, Hong Kong-based life insurance broker RE Lee International is looking to expand in the UK, so we'll speak to the Chief Executive Officer, Calvin Lowe. That's next, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I'll try and play that role.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now we're just getting some breaking news out of Italy. We understand from Il Corriere della Sera, one of the most respected newspapers in Italy, that the former Italian Premier Silvio Berlusconi has died, age 86. Now Berlusconi was hospitalized in Milan on Friday, just 3 weeks after being released from a previous treatment. He has a history of heart ailments, including a malfunctioning valve that surgeons replaced in 2016. He was hospitalized for lung infection in 2020. This was Italy's longest-serving post-war prime minister. Of course, he was also plagued by sexual scandals and allegations of corruption. He is also now in a coalition with the current prime minister, Giorgia Meloni, and so that could also have implications for the stability of the government. So he has a good chunk of that coalition government. He doesn't have an heir apparent, so we'll see exactly what happens in the next couple of hours and days. Now let's get straight to your Bloomberg Business Flash. Here's Sarah Halls. Hi, Sarah.
Hi, Francine. UBS has reportedly completed the acquisition of Credit Suisse. It's the biggest merger in banking since the 2008 financial crisis. UBS agreed to take over Credit Suisse in March in an emergency sale brokered by the government after a confidence crisis and a flood of client outflows put Credit Suisse on the verge of bankruptcy. U.S. agribusiness Bunge is said to be nearing a deal to acquire Glencore-backed Viterra. Sources say the deal may be announced by Monday and that Bunge shareholders will hold a significant majority. The acquisition will create an agricultural giant large enough to take on Cargill and Archer Daniels Midland. Crispin Odey's main hedge fund will be run by his co-manager, Freddie Neve, following his ouster. The London-based firm decided to remove its founder, who's fresh assault allegations. Crispin Odey has denied the allegations. Meanwhile, the Financial Times says EU funds managed by Odey's firm are discussing restrictions on withdrawals amid fears of high outflows in the coming days. Luminar's board has accepted the resignation of CEO Francis de Souza, handing a victory to Carl Icahn, who had been seeking his removal. De Souza initially survived the activist investors' attack when he was one of 8 directors re-elected last month. Charles Daswell was named interim CEO, while the San Diego-based gene tech company seeks a replacement. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Francine.
Sarah, thank you so much. Sarah Halls in Dubai. Now, Hong Kong-based insurance broker R.A. Lee International is looking to expand here in the UK. Joining us now is R.A. Lee International's Chief Executive Officer, is Calvin Lowe. Calvin, thank you so much for joining us. Now, we talk about the UK every day. Many companies actually decide to come away from the UK. You're opening a London office. You cater to high net worth individuals. Where do you see the opportunity?
Well, I think the opportunity has always been here. You know, it's a globally as a hub, financial hub. Despite what's going on for the last few years, pandemic, post-pandemic, everyone's rushing back here. Business is back on track, at least from my perspective. So it's a good opportunity.
And so, Calvin, so who are you trying to cater for here in the UK? Is it foreigners that come and live here? Is it Hong Kongers that maybe have moved to London and elsewhere in the UK? Or is it actually British nationals?
It's a combination of all, actually. Basically, we're targeting the ultra high net worth. It's a niche market, but we're providing a niche solution for them. So to answer your question, it's all high net worth individuals who have liquidity issues, and that's the market that we're trying to get in.
Look, you're a private company, and we understand, though, that it's a very lucrative niche market. How have behaviors of ultra-high net worth individuals, and we're talking, I mean, who do you cater for? It's even, smaller than the 1%. And how have their demands changed with the pandemic and beyond?
I think demand has changed, not in terms of the product or the solutions per se, but I think the age group that people are getting these solutions have changed, meaning they're more polarized, more elderly and more younger clients. So previously, our average client's age would be roughly around 50, 60. Now there's a clear cut between like 30, 40 and 60, 70.
And why do you think that is? Again, the 30, 40, are they thinking more about life beyond? Or is there a different, actually, a kind of clientele and engagement with their life insurer?
I think what happened throughout the pandemic really changed the mindset. The transferring of wealth to the next generation or third generation is happening. And the pandemic has definitely created a pause. And reality is starting to hit the younger families, where they want to ensure the legacy continues, even at that age. So, buying insurance or setting up some sort of like structure today is always more efficient than tomorrow.
So, Calvin, how do you market? How do you get the attention of these ultra high net worth individuals? Do you have to have partnerships with some of the asset managers, or is it word of mouth?
Most of our referrals are from private banks, law firms, accounting firms. But nowadays, a lot of it is actually word of mouth, because that niche group is very small. Yeah. So, once they feel comfortable and they work with you for quite a few years, they would, refer their clients, their family members, their business partners to us.
Calvin, Formula One, you're always in the headlines because you want to buy, parts of it. Like, do you love Formula One personally, or do you think it makes a good business sense?
I love Formula One personally, and I do believe it does make business sense. But it does take time. I think we have to make sure that we're not going in there rash without going through the calculations, hit those milestones, hit those marks, then one should consider.
So what's your ultimate plan? Like, how much are you willing to spend to do what?
I'm willing to spend enough money to make sure that there's enough Asian exposure in the F1 world. However that much is, I'm not sure yet. I think that those numbers, and a lot of players are still in negotiation stage right now. So, but it is a big opportunity for the F1 community and for everyone in Asia.
Okay, Calvin, it's a great pleasure to have you on air, so we'll get you back on also to talk about Formula One. Calvin Loh, their RE Lee International Chief Executive Officer. Now, we just also had news about 10 minutes ago of Silvio Berlusconi, the media mogul in Italy, whose reign as Italy's longest-serving post-war prime minister was also plagued by scandals. He has died. This is according to the Italian newspaper Il Corriere della Sera. He was 86 years old. Berlusconi was hospitalized in Milan on Friday, just 3 weeks after being released from a previous treatment. Now, this has implications for the stability of the Italian government, given he's in coalition with Giorgia Meloni. We'll see who the heir apparent is. For the moment, there's not one name that comes to mind, but we'll see what happens in the next couple of hours and, of course, days. We'll have plenty more on Italian politics. We'll also talk UK politics. Coming up, is Britain adrift? Some of the world's top executives are fearful of Britain's post-Brexit investment climate. We find out why. That's next, and this is Bloomberg.
you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Now, complaints from some of the world's biggest companies highlighting the UK's deteriorating investment climate. And some are not convinced that the Prime Minister Rishi Sunak's plans will be enough to jumpstart growth. Now, that's the subject of today's Bloomberg's Big Take. Is Britain adrift? Well, Bloomberg's Caroline Hepker has been, of course, digging into some of the findings and joins us now. And this comes actually after a lot of political turmoil, I have to say, in the last 72 hours. So why are some of the executives sounding now the alarm on Britain as an investment destination?
So this was a big dive that we've done across the Bloomberg newsroom and on Bloomberg Radio. So we've heard a lot of criticism in the last couple of months. Think about James Dyson or Stellantis, Revolut or Microsoft. They've all had criticisms for the UK government. And yes, now it looks as if after a very difficult weekend, the government is going to be distracted again in terms of the politics rather than the economics. Essentially, business leaders are worried about the future direction of Britain, whether there is really a long-term plan. So we've spoken to a whole number of business leaders, including Archie Norman, who is the chairman of Marks & Spencer. Okay, this is perhaps Britain's best-known brand. He is also himself a lifelong Conservative, a former MP, and a former advisor to government. He is a real heavy hitter in terms of his views. And I asked him outright, does he think that the UK is adrift?
I think there's a huge appetite for a new agenda, for a sense of where are we trying to compete in the world? What is our strategy? Post-Brexit, it's no good just saying we left and we're going to have some trade agreements. It's how are we now going to compete in the world? You know, we've created this dislocation. We've created frictionful trade. You know, rightly or wrongly, that's what people voted to do. Now we need a plan for how we compete. And it used to be called industrial strategy. Now, this government, for whatever reason, has an aversion to the expression industrial strategy. It's what everybody else calls it, so they can't bring themselves to say it. But I don't care whether it's a growth strategy or competitiveness. It's got to be a profound point of view as to how Britain's going to compete.
So, profound point of view. That was Archie Norman, the chairman of Marks & Spencer, speaking to me. Look, the Prime Minister's 5 pledges, which are largely on the economy, haven't done the trick. Neither has the plan from the Chancellor Jeremy Hunt, the Edinburgh reforms. They have not convinced business, at least so far. Archie Norman's also got a range of criticism. He talks about skills. The government is agnostic on what it wants people actually to do in terms of building their skills. He says we've lost the plot when it comes to attracting businesses to headquarter in London, as well as to list. He also talks about specific interventions from government, which have been, quote, harebrained. He talks about, in particular, this idea of a price cap on essential foods being a failed policy of the 70s that has been tried before. So really pretty critical of the direction of government and in need of something longer term.
And Caroline, I guess, you know, the political drama with Boris Johnson and also Nicola Sturgeon doesn't help things, as you know, the government could be distracted once again.
Yeah, this is the issue. I mean, Rishi Sunak was speaking at Tech Week this morning in London, talking about trying to make Britain an AI hub and a regulator here in the UK. This comes after 72 hours in which Boris Johnson's resignation means that there will be 3 by-elections. This is going to put the Conservatives to the test at a really difficult moment. Up in Scotland, the SNP leader, the face of Scottish independence, Nicola Sturgeon, was arrested, not charged, then released on a separate SNP issue around finances. That means Labour could have a chance there. This is looking very precarious politically, but again, it's the politics and perhaps the internal machinations of the Conservative Party that dominate rather than the really big post-Brexit economic issues.
Caroline, thank you so much. As always, Bloomberg Radio's Caroline Hebker there with that deep dive into the UK. Now, more on our breaking news. The former Italian Premier Silvio Berlusconi has died. That's according to Italian media. Let's bring in our Rome Bureau Chief, Alessandro Speciale. Alessandro, he does not have a direct role in government, but of course, Forza Italia, his party, is a member of the Prime Minister's right-wing coalition. So what does that mean for the stability of Italian politics?
Well, it's still an open question. I think even if Berlusconi had been healed for weeks and for months, it had been reported and revealed that he was suffering from leukemia, and he was 45 days in hospital only in recent months. The Italian political system is still shell-shocked. Matteo Salvini, his long ally, was apparently in tears on Italian TV when he got the news. And of course, Forza Italia was 100% dependent on Berlusconi as a person, on his charismatic figure. What will happen to Forza Italia without Berlusconi? It's difficult to imagine that it can go on as it is. And of course, Giorgia Meloni, the Prime Minister, is stronger than ever.
Okay, Alessandro, thank you so much. And of course, he has been written off repeatedly by commentators and political rivals following some pretty bad electoral defeats, but he just kept on coming back. So it's a real force of nature that has defined Italian politics for the good or for the worse, depending on where you stand. Now, Bloomberg Surveillance Early Edition continues in the next hour with Kriti Gupta in New York, Anna Edwards here in London, and this is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bechet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg. This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Central banks in the US, Europe, China, and Japan are poised to decide on interest rates this week. The Fed's expected to take its first pause from its rate hike campaign that started 15 months ago. Goldman Sachs raises its year-end target for the S&P 500. Strategists say the rally in U.S. equities will broaden beyond mega-cap tech stocks. And the deal is done in Switzerland. UBS has completed its takeover of Credit Suisse, creating a global wealth management titan. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York, and it certainly is a very, very busy week when it comes to the macro picture and central banks to the fore, Kriti.
And I wonder what kind of surprises are in store for us this week, Anna. Of course, last week we had the Bank of Canada, the RBA, and very quickly the pricing around a lot of what the Federal Reserve is going to do this week, really change very quickly and create a little bit of volatility. What you're seeing right now is perhaps a little bit of optimism in the markets, but remember, you have seen caution come out on Friday, so perhaps a little bit more willingness to hop in this market. We're looking at futures higher by about 0.4%, 43.65 on that contract for our radio audience here. To me, what's interesting, though, is the 2-year yield, because as we price in those more hawkish bets from the Federal Reserve and potentially central banks around the world, but the Federal Reserve is what I have my eye on, we're looking at a 2-year yield that's getting closer and closer to 5%. Anna, remember when that call for the terminal rate at 5% was such a scandalous call led by Bloomberg Economics' Anna Wong? Now it kind of feels like the 2-year yield is saying, well, maybe we might be able to go a little bit higher, really shown by the fact that it's getting closer and closer to that level. 460 on that contract there, higher by about 1 basis point early in the session. But really keep an eye on it. Remember, sustainability above that 4.5% level is crucial for the 2-year yield from a technical basis. The dollar is interesting because we are seeing a little bit of weakness broadly across all the currencies, but I have a big eye on China right now, which brings me to the dollar versus the offshore yuan. You are seeing the lowest level for the offshore yuan this year. It's an enormous deal as we start to see the PBOC talk about perhaps accepting a little bit of a weaker currency. That's going to be interesting to watch. But on the back of that, you see a massive ripple effect, Anna, in the commodity space, specifically iron ore, that overnight was down about 5% in the Asian session, now seeing a little bit of weakness, down about 0.5%.
Yes, and Kriti, oil prices also reflecting that weakness when it comes to the China story. That's weighing on the London market. So we're broadly positive across European stocks today, but energy is one underperforming sector, and the UK market is just up by 0.2%, whereas the Xetra DAX benefiting from the auto space, which goes higher, up by more than 1% over on the German market. Let's roll on and show you what we've got in terms of that energy story, because it is the worst performing sector for much of this morning here in Europe, and that is all because Brent crude continues to fall, down by another 2.3%. Concerns once again then, Kriti, about China, and also people asking questions whether the Saudi Arabian cut to production has really put any kind of floor under the oil price. Not looking like it so much right now. This is Glencore, the mining business, the commodity trading business as well, up by 0.7%. But I wanted to flag a continuation of the saga that is their attempt to buy Teck Resources over in Canada. The latest in this saga is that they've now made a specific cash offer for the coal part of the business. They're hoping that might smooth the way. They still want to buy the whole of Teck, but for the the moment they're approaching on that front, and Teck says it is considering that particular approach. So we'll continue to watch that one. Novo Nordisk is up by over 1%. They make treatments around diabetes, of course, and obesity, sorry. And so as a result, we're seeing further investment in this growing part of their business. They're making an investment into Denmark, into further production facilities in Denmark. But this isn't about the obesity drug where they've seen some supply chain issues. It's about preventing perhaps supply chain issues in other parts of the company. And I just want to put in the UK yield story here, because we've got yields going higher a little bit more in Europe than in the UK than we have elsewhere in Europe. And we heard from Jonathan Haskell, who was talking about the importance of leaning into the inflation fight. So perhaps that cements expectations around more hikes from the BOE, Chrissy.
And certainly an interesting dynamic for this week for the Federal Reserve as well. Really, central banks this week are going to be seeing some big market moves. In the U.S., though, investors loading up on call options before that rate decision. At one point, showing the biggest bias towards calls, and get this, 14 months. One big call the Goldman strategists have made is that the rally in U.S. equities is going to go broadly beyond tech. Joining us now, Bloomberg Markets reporter Valerie Teitel joins us to walk us through the call. A little bit of optimism baked in these markets, which is interesting, Valerie, because we're talking about potentially a more hawkish stance. How do you square the two?
Look, Critty, I think people found themselves behind on this equity rally and are now looking for reasons to chase it. As you mentioned, that call ratio on the U.S. exchange has gradually been increasing over the month of May and June. And then retail investors have also turned very bullish. And then we heard from Goldman over the weekend. They've raised their year-end target to 4,500, implying a 5% rally from here to year-end, saying that, as you mentioned, the rally should broaden beyond tech, and they argue that prior narrow rallies have always been followed by a general valuation catch-up, noting that in the 9 past episodes of narrow rallies since the 1980s, all have been followed by a catch-up in valuations from broader equity sectors that ultimately extended the rally in the S&P. So Goldman is flipping bullish from there.
Okay, so Goldman turning more bullish on the S&P, a little bit less bullish on oil, I saw, and also interesting what they say on China. Goldman expecting an L-shaped recovery in the Chinese property market. Is L a recovery shape?
That was my same question when I read that headline this morning. Doesn't imply very much of a recovery with an L, but they are expecting a multi-year-long drag of the housing sector on Chinese growth. And the big view here is that policymakers are not going to use the property sector like they have in the past as a stimulus tool. Remember back in 2015, 2018, they really engineered an upcycle in the property market, but Goldman is saying they don't expect that very specific stimulus to come again, and instead China is going to focus more on strategically important sectors if they do any easing in the next few months.
And of course, the interesting part is the fallout you're going to see in the metal space as a result. Bloomberg's Valerie Teitel walking us through that story. Thank you, as always, this morning. Speaking with the metal story, blank check firm of a Russian metal industry veteran has agreed to acquire 2 Brazilian mines for $1 billion, including debt, in a bid to tap demand from EV makers. Joining us now is Ben Sent, Bloomberg's managing editor covering deals. Ben, walk us through this deal, walk us through this transaction. How is it different from what we're seeing in the SPAC space broadly?
Well, one thing that's really interesting is just that it's targeting a really hot space. They've got these producing mines in Brazil. They're targeting nickel, copper. These are metals that go into electric vehicles, and the automotive industry is desperate to secure supply. Battery makers are scrounging around the world to see if they can find ways to get the metals that they desperately need to ramp up production. The really interesting thing is that they've got a ton of money lined up for this deal, unlike some other SPAC deals where they really struggled to secure the financing. So you've got people like Volkswagen, you've got the Chrysler owners, Stellantis putting in money. Glencore is getting an offtake agreement. They've got bank financing, they've got royalty financing lined up. So it looks like a deal where they've really got the money and found some good assets.
Okay, so we see manufacturers going up the supply chain, trying to secure those supplies. Glencore also in the news over a different deal. I mentioned it a little bit earlier. They're trying, once again, they keep trying to buy the tech business, the tech resources business in Canada, this time specifically targeting the coal side. How does this change the game in terms of Glencore's pursuit of tech?
This basically opens the door for them to talk. Tech has made it really clear that they do not want to talk about a deal for the entire business. They're really keen on the split. because their investors want to exit coal. So Glencore, by coming in for the coal business, this gives them an opportunity to speak to Teck, which has been ignoring them so far. Now they're willing to engage, and they can also try to discuss the merits of their deal for the whole company. It kind of gets them to the table.
Thanks so much. Thanks very much, Ben. Bloomberg's Ben Sent joining us with the latest on those M&A themes surrounding the resources space. Now, UBS has completed its takeover of Credit Suisse, sealing the biggest merger in banking since the 2008 financial crisis. Let's get more now with Bloomberg's Leo Ken Sherpa, who has details for us. Good morning to you, Leo. So what does the completion mean then, more practically, for UBS and the Credit Suisse business that they've just acquired?
Yes, so UBS has now full access to Credit Suisse's business, and it can see the clients, the deals, and also the loan exposures, and it can now properly decide which parts of the business it wants to keep and which parts it wants to wind down. And that review is likely to lead to thousands of job cuts.
Talk to us a little bit about kind of more of the details around this particular merger. It's the biggest banking merger since 2008. What does it mean more broadly when we talk about the banking sector, arguably on both sides of the Atlantic?
Yes, so I think two implications really. One for the broader wealth management market. You know, UBS has been a giant player already before the deal, and now I think competitors will watch this even bigger player very closely. And it also has implications for the Swiss economy, because Swiss companies now have fewer options when it comes to financing, and it will be interesting to see the fallout from that.
Leo, thanks very much. Bloomberg's finance reporter Leo Ken Sherpa with the latest on that M&A deal coming as it did a few months ago, finalised today in Swiss banking. Coming up, investors bracing for a marathon of central bank decisions. More on that with Janet Mui, RBC Bruin Dolphin, head of market analysis. We'll get an update on their equities call. A lot to price in right now. Plus, we will bring you our exclusive interview with the DeepMind CEO, Demis Hassabis, on the innovation and regulation of AI. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Wednesday, will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment. And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, this week is all about central banking. You've got the Federal Reserve, the BOE, the ECB. You've got plenty of talk about potentially needing to stay even more hawkish as we talk about inflation in some parts of the world hitting a double peak, in other parts of the world just not coming down fast enough. A conversation on this side of the Atlantic, and a Federal Reserve specifically not able to really dent the labor market in a meaningful way. And the other parts of the world perhaps seeing some sort of a revitalization of commodity prices feeding into the inflation picture. For our radio audience, I want to bring you a chart. For our TV audience, stick with me here. We are looking at the average G10 policy rate. Essentially, out of the 10 largest economies in the world, you are seeing essentially every single central bank has hiked except for the Bank of Japan. And what you are looking at with that average G10 policy rate is that it's kind of really shot up higher, but is starting to curve just a little bit. That convexity is crucial, Anna, as we simply talk about whether or not this is going to sustain and how quickly those odds of a recession get in there. That's something we're going to be discussing with our next guest here. Bloomberg's Lynn Thomason joins us now. Lynn, walk us through this week and what the biggest surprise could be around the world.
Oh, interesting. So, I mean, I think the theme for this week is obviously going to be central bank decisions and US CPI data. I mean, there's just a lot of central banks coming out with the Fed, the ECB. China's coming out with a decision later in the week. So I think all eyes are going to be on what central bankers say and what are some of the discussions around where they could take interest rates next.
Lynn, good morning to you. I mean, where do you think the biggest discussion will be, or the biggest uncertainty? Because, yeah, sure, the Fed could surprise, but the expectation is this kind of hawkish skip, if you like. The ECB, the expectation is a hike. The PBOC, though, a lot of different opinions there about whether we get some kind of movement from the Chinese.
Yeah, absolutely. I mean, I think the interesting thing with China is it has been so bearish that there's policy support, and so it seems like the expectation is they're going to hold. And you talk to a lot of investors, and they say now is not the time to get into China.
Well, speaking of that China story, the diversion between the PBOC and the Federal Reserve and the other banks, I want to say in the West as well, how much of a concern is that? It seemed to be in 2020, 2021, but is that still something we should be watching for, that the PBOC may not be on the same page?
Yeah, absolutely. I mean, I think, looking at the inflation chart of those two countries, the interesting thing is that, U.S. inflation has continued to go higher and China has continued to be quite subdued. I mean, that in some ways speaks to the strength of the economies, that we're seeing a lot of concern about the Chinese, health of the economy. And, in the U.S., things have continued to be very strong.
Yeah, and the Chinese inflation, almost in deflation, as we covered last week. Yeah. So we'll get plenty of data out, as well as these these policy meetings. But sticking with the policy meetings, the ECB is one of those. Is there a sort of difficulty with the concept of the ECB continuing to hike, even if we see the Fed on pause? Or is that something the ECB is just strong enough to get away with?
Yeah, I mean, I think definitely the consensus is ECB is going to continue hiking, and the Fed is going to be on this pause, and you're sort of seeing this divergence. And if you take a step back, I mean, I think what we're really seeing is this kind of muddying, or this difficulty of really what happens next. So we're transitioning from a time when everyone was hiking and it was very clear what was going to happen to now there's a lot of discussion. You're seeing, like we saw with Australia and Canada last week, they think they're on pause, but then they come out and actually hike.
All right, Lynn, a final question on this. When you talk about the hiking story here, let's translate that to the markets. How much of that is actually priced in? How much of that could rattle the potential optimism we're seeing it this morning?
The million-dollar question. How much of it is priced in? I think, these days it feels like the market is really interested in what's going on with AI and tech, and it's really the big tech rally. So in some ways, that is a read off of the fact that the Fed is, going softer, and, there's this ongoing discussion of, are we going to see a pivot late in the year? When will they start to cut? So I think, if the Fed sticks to consensus, it's going to be very subdued, like we've seen in the past few weeks. But if there's a surprise, then you can expect markets are going to move on that.
Okay, Lynn, thanks very much. Lynn Thomason joining us there with the latest on markets and a look ahead to a very busy week on the central banking front. For more market analysis, check out MLIV Go. That's the function to use to find the Markets Live blog. This is Bloomberg.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. You've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple of people, our average restaurant now does about over $1 million per restaurant in digital sales.
The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Now, keeping up to date with news from around the world, here's the first word. In Hong Kong, there's growing concern over the government's intent to ban internet platforms from hosting a protest song. The High Court is examining an injunction that would make it illegal for anyone with criminal intent to perform or broadcast a song entitled Glory to Hong Kong. There are fears that the move could prompt Western tech firms such as Google to pull out of the city. Former President Trump is holding on to his Republican base as he heads to court to face federal charges regarding classified documents. About 3/4 of likely Republican primary voters in the CBS News YouGov poll said they view the accusations as politically motivated. The former president is due in court in Miami on Tuesday. In the UK, Boris Johnson's surprise resignation from Parliament means a new electoral challenge for Prime Minister Rishi Sunak. Johnson quit Friday after receiving the funding of the investigation into whether he misled lawmakers over his knowledge of COVID rule breaches by officials. The resignation triggered at least 3 by-elections that could highlight softening support for Sunak's Conservative Party. Former Italian Prime Minister Silvio Berlusconi has died. Berlusconi was a billionaire media mogul before becoming Italy's longest-serving post-war prime minister. His more than 9 years in office were marked by sex scandals and allegations of corruption. Bloomberg's Stephen Carroll takes a look at his life.
Silvio Berlusconi, the flamboyant media mogul and Italy's longest-serving post-war prime minister, who was plagued by sex scandals and allegations of corruption, has died. Berlusconi built a television empire in the 1980s before deploying his showmanship and talent for catchy soundbites to win 3 national elections. He served 9 years as prime minister, an unprecedented tenure in a country plagued by revolving door governments. Despite his wealth, his fortune was estimated at $7.5 billion as of April of 2023, according to the Bloomberg Billionaires Index. Berlusconi cast himself as a man of the people, an outsider challenging a discredited ruling class with the promise of national renewal. His style and rhetoric were similar to the rallies of a military leader, a politician, an athletic coach, but most of all they resembled talks of an American self-help guru, wrote biographer Alexander Still. Written off repeatedly by commentators and political rivals following bruising electoral defeats and scandals in his business and private life, Berlusconi found ways to bounce back again and again. But in his last years in power, he struggled to overcome a sex scandal over alleged bunga-bunga sex parties that he described as elegant dinners. In recent years, Berlusconi was able to maintain public interest. His Forza political party is a junior member in Giorgia Meloni's current government. He was 86.
A truly crucial part of the electoral history in Italy, as well as, of course, the media landscape. And I think what's so interesting is that even after his party lost the kind of dominant power, he still kind of functioned a little bit as a kingmaker in some respects with kind of who he throws his weight behind.
Yeah, helping to put together those right-side coalitions. And that's got to be the biggest question now in terms of the political picture that he leaves behind and his lasting impact, or the impact he still has even now after his death. The fate of his own party, Forza Italia, which is, as we were just hearing there from Stephen Carroll, part of the coalition that Giorgia Meloni runs. His party is part of that. And I know that one of the key questions hanging over this then is what is the future of that party that was so driven by him and his personality and his vision? What is the role of that party? Who can take it on? So that'll be certainly something to watch, but certainly a character that really divided opinion as well. As we heard there from Stephen, many will know him, of course, as this big electoral success in Italy, but others as somebody who brought allegations of corruption and sex scandals.
And of course, the media aspect as well. Look, he still owned quite a big stake in a mid-sized Italian bank, Banca Mediolanum. He had controls in a lot of the publishing groups. And of course, in addition to the massive media landscape he really began with, in addition, by the way, to the soccer team AC Monza as well. So it really has hands in a million and one things. And interesting to see then, to your point, how Italy progresses from here and what kind of legacy he's left behind in terms of the overlap of those two arenas, Anna.
Okay, we'll get back to the markets shortly. We'll be talking to Janet Mui from Brewin Dolphin. We'll get her thoughts on where the markets head. We have a big debate, she says, going on over at Brewin Dolphin about whether to raise their global equity weighting. So we'll certainly talk about that. Given what we've seen that retail investors are doing, wanting to catch up perhaps with some of the rally that maybe they've missed out on in recent months. So we'll watch that conversation closely. How much does the equity rally still have to give? We'll talk about that with Janet Mui shortly. This is Bloomberg.
Middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are, launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday, it's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the real prospect. Demand is surging. By some estimates, China are on track to exceed 8 million. China are on track to exceed 8 million.
Media mogul and Italy's long.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Central banks in the U.S., Europe, China, and Japan are poised to decide on interest rates this week. The Fed's expected to take its first pause from its rate hike campaign that started 15 months ago. Goldman Sachs raised its year-end target for the S&P 500. Strategists say the rally in U.S. equities will broaden beyond mega-cap tech stocks. And the deal is done in Switzerland. UBS has completed its takeover of Credit Suisse, creating a global wealth management titan. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, look, it is all about central bank policy, but I think what's crucial here is every major central bank around the world really on the same page? And I feel like that's what's going to dictate the market action.
Yeah, and right in the moment, we don't seem to be on the same page. I mean, the Fed pauses maybe, the ECB hikes perhaps, and opinion divided on what the PBOC does. The BOJ expected to hold pat, but we'll see if that actually comes to pass. Given all of the central banks we're going to hear from, Kriti, perhaps it is surprising we're making such strong gains this morning here in Europe. The Stoxx 600 up by 0.5% this morning. The energy stocks, though, are not doing well, and energy under pressure as a result of a falling oil price, down by 2.3% on Brent crude. Glencore is interesting. The stock not moving much, but they're still trying to get hold of Teck Resources over in Canada, and as a result of that, the latest part of their approach is to make a cash offer for the coal business and then to try and spin off that coal business. They still want the whole of Teck, but this is the current approach. And here we've got the Italian-German spread, and we're seeing a reduction in that spread as we speak, down to multi-month lows. All of this because investors are being drawn into the Italian BTP market because of the yields relative to the rest of Europe being pretty healthy. Kriti, what do you see in US markets?
Yeah, similar sentiment, Anna. The idea here that you're seeing a little bit of green on the screen, perhaps a little bit of optimism in what could be a very volatile week. What's important to keep in mind is when you look at positioning for the S&P 500, you've actually seen a lot of call options being bought, which tells you that perhaps there is some thought of maybe this could be a sustainable rally, even though mostly so far it's been quite tech heavy. S&P futures higher by about 0.4% on that thought process, 43.64 on those contracts. The two-year yield inching higher just by 2 basis points, but inching higher nonetheless. We're looking at 4.62 on the front end of the curve. Again, if you are betting that the Federal Reserve may actually be a little bit more hawkish, that is the yield you want to watch just to see what the bond market is pricing in. To me, though, the currency story is interesting because as we see some weakness in the dollar broadly, by the way, against all the major currencies, the strength is coming a little bit from, or the weakness, I should say, is coming a little bit from the offshore yuan. You are now seeing the offshore yuan trade at the lowest level against the dollar in an entire year. It really speaks to the idea that the Chinese growth story is perhaps allowing the PBOC to accept a slightly weaker currency. And that's going to be an interesting story in terms of the ripple effects for the commodity space, commodities like gold, copper, oil, and of course, iron ore.
Okay, Kriti, let's have a markets conversation now with Janet Mui, RBC Bruin Dolphin Head of Market Analysis, who joins us this morning. Very good to have you with us, Janet. Really interesting to think about where retail investors are putting their money and what that tells us at this point, because I know over at Bruin Dolphin you're thinking about whether you should raise your global equity weighting. Interesting to see this US retail investor measure shows that suddenly we've seen an abrupt bullish flip from retail investors, suddenly turning bullish on this sort of bull-bear spread. Does that tell us anything interesting, either as a lagging or a forward-looking indicator, what US retail investors are up to?
Hi, good morning, Anna. Thanks for having me. I think this data adds to further evidence that the market is probably a bit overbought, so sentiment turning a little bit more bullish. We also have our own technical sentiment indicators, which is about neutral, but is also getting a little bit bullish, the momentum. So that's why we are cautious, because we think the year-to-date market rally has been very strong, despite the monetary policy being very tight, despite inflation is still pretty much a concern, and the stress in the regional banking sector, et cetera, et cetera. So we do think there's a bit of froth in the market. So we are a bit cautious, and we don't think it is right now the time to buy equities.
But you do see an improving backdrop in terms of corporate profits. I wonder what gives you that confidence, Janet. We just did a survey, the Markets Live team doing a survey of readers, which showed that there's a belief that greedflation is real, does exist, but that those outsized, non-usual profits will come down and will sort of mean revert. Do you not expect to see that, Janet?
Yeah, so basically, the past few earnings season, it turned out to be better than people anticipated, especially for some of the big tech companies. So our expectation is that we do expect earnings growth to slow down. So that's why we're cautious. We do think that the profit margins is going to come down because consumers are going to be more stressed and squeezed in the future. We think the tightening monetary policy, the conditions is the key why the economy will slow down. And we think, while the Fed may keep interest rate at about 5%, I think you will see that lagged impact on the economy going forward, and particularly more visible in early 2024.
So Janet, what is it going to take then to perhaps see a bigger drawdown? And should we be worried really about a bigger drawdown? Is this an environment where we kind of need to have the economy kind of flush things out, restart to some extent, or perhaps be rescued by something like Fed cuts?
Yeah, I think the rally year to date we've seen, I think partially is driven by the expectation of a Fed pivot to the extent that Fed may potentially cut interest rates, which we didn't agree with. So we do think that inflation is going to be a problem. It is going to be lingering in the background. So unless we address the inflation problem, we see inflation back moving towards more than 2% target, I think market will continue to be cautious. And of course, the Fed won't be comfortable with that. And without recession, I think it will be very hard to get inflation down to that, because what we see in the market is that year to date we got the rally. It actually eases financial conditions, and if there is a broader rally in the equity market, not just the several tech names, I think it will further improve the financial conditions, which is actually not great to fight inflation. So I think ultimately you need some kind of a pullback in market, and also a slowdown in the economy, a higher unemployment rate for inflation to come down sustainably.
But Janet, if we're talking about keeping interest rates higher for longer, wouldn't it make more sense to kind of use equities as an entry point right now, given that the pain may come later in the economy, and then perhaps see a defensive bid into the U.S. stock market kind of return the bid that you are seeing right now? How do you think about the dynamic between interest rates in the long term, I'm thinking, say, a 5-year time horizon, for example, and equities on a 5-year time horizon?
Yes, so for the longer term, we like U.S. equities. We have a preference structurally for U.S. equities, driven by the fact that it is very high in the tech sector, which is very innovative. You have the AI theme going on. The problem we have right now is valuation, right? The U.S. is trading at a premium. And in the short term, maybe it doesn't matter too much, but in the longer term, valuation does matter. So as we mentioned at the very beginning of this interview, we think there's a bit of froth in some of these tech names. So we would hope to perhaps get a better entry point sometime later in the year. But overall, we are favoring U.S. equities and generally global equities in the longer term. So because that's the area where you tend to get the best relative returns.
Where do you see China heading, Janet? We might get further stimulus from the government or from the PBOC this week. Is that going to change your view on China at all?
Probably not. I think first is the China reopening story is fizzling out. And we don't think that the Chinese authorities are going to embark on a bold easing measure and bold stimulus anyway. So they will get very targeted easing measures, which I don't think it will please the market enough. And after all, we are still concerned about the geopolitics and the politics. So as we have actually mentioned many times in the Bloomberg interviews before, we prefer to access our China exposure via Western European blue chip companies or Japanese companies that are exposed to Chinese consumers.
Janet, thanks very much. Janet Mui of RBC Brewin Dolphin. Thanks for joining us with your views on the market. Coming up, Janet was talking about the excitement we've seen around some of those AI themes. We'll certainly dive into that. Our exclusive interview with DeepMind CEO Demis Hassabis coming up next. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. AI is dominating the conversation at London Tech Week this week as the UK's top business leaders, policymakers and investors meet. Tom McKenzie is on the ground for us and has been speaking exclusively with the DeepMind CEO, Demis Hassabis, on the AI revolution in scientific research.
I think there are three different types of, broadly speaking, buckets of risk. I think number one is bad actors using these dual-purpose technologies in ways that are bad for society. I think that's true of any new transformative technology down the years, so I think AI is no different, other than the fact that it's maybe the most general type of technology. So that becomes a question of access to these technologies, and that's what needs to be thought about there. I think the second one is near-term use cases where things like deepfakes or disinformation or bias in our systems that can affect near-term products and applications that we see today. And I think that has to be mitigated by some new technologies, things like watermarking, and so you can detect deep fakes, but also existing regulation being beefed up in areas like health or transport to deal with the coming new wave of AI, just like we did with the internet and mobile. And then finally, there are these longer-term technical AI risks that I think more research is required to understand them better, understand these systems, where they're going, to allow us to sort of figure out what the bounds are of what these systems can do, how we can control them, how do we align them to human preferences. And then once we understand those better, we can sort of, government and others, international society can sort of put the guardrails around it. So I think it's important when you're in regions of, accelerating technology, high uncertainty. Doesn't mean things are going to go wrong, but it means that we're as uncertain about what the underlying technology is going to look like in 5-10 years. Then I think we should proceed with what's called the precautionary principle. So proceed with exceptional care and thought, and use things like the scientific method.
You're very used to putting probabilities on things. So I just want to push you on the most extreme area and the most extreme risk. And I feel it feels hyperbolic to talk about hyperbole, to talk about potential extinction as a result of AI. But in your time, whether it's developing games or as a chess grandmaster, you know about how to put probabilities on things. What would you put the probability at of AI-linked extinction?
Well, look, I think it's I don't think you can, no one can put a probability on these things. I think there's a huge amount of uncertainty. The probability, many of my colleagues think, is very small. But even if it's very small, one should pay attention to those things and ahead of time, not wait for those things to happen. And if you look at things even like, much less powerful things like social media of the last decade, fantastic benefits to society, many things in individuals, in our social lives and so on, but also has unintended consequences, as we're now seeing. And so I would like us with AI to get ahead of those things and to be pre-prepared and to put down the guardrails, society put down the guardrails ahead of time, not after the fact. And I think it's too important a technology not to get that right. So I think all that letter was saying is we should pay attention. And, I think the Prime Minister and other governments are. And I think things like the Global Summit that the Prime Minister announced in the UK, bringing together experts from around the world, from academia, from civil society, from government and from industry to come and talk about these risks and these opportunities, and then what can be done to mitigate them. For example, come up with the right evaluation tests and benchmarks to evaluate what these systems can do and the capabilities they have, I think is the right next step. So,
for those who would say, look, even if there's just a 1 or 2% chance of a catastrophe, then just stop where you're at. What would you say to those people?
Well, as I said, we have no, at the moment there's a huge amount of uncertainty over these future technologies. Very hard to predict what's going to happen in 10, 15, 20 years' time. If you think back to 10 years ago or 15 years ago when we started DeepMind, no one thought AI was possible. No one was working on AI. When I remember when I was doing my postdoc in academia, the professors would eye roll at even the mention of AI as being something that's science fiction and not a serious subject. And look how far we've come in the last 10, 15 years. So I think it's hard to predict things going forward. But the reason to work on AI is what we discussed at the beginning, which is the potential it has to help society with all of these challenges that we have, from disease to climate to energy. All of these things, I think, can be impacted and helped by a technology, an incredible tool like AI, helping the world's experts solve these problems.
And what would you advise governments, not just the UK government, governments around the world, to focus on, to prioritise now in terms of policies they can enact now to put some guardrails in place around this technology?
I think the number one thing that needs to be done right now is to put more investment into AI safety research and understanding what these systems can do, analyzing them, interpreting them, and then coming up with things like evaluation benchmarks so that we can understand what capabilities we want and what guardrails that we therefore should have to make sure society reaps all the benefits of these systems and the incredible potential they have, and we mitigate the risks.
Last question on jobs. You have children. What jobs would you advise your children to steer away from because you think that in 10, 15, 20 years they're just not going to exist?
Again, I think the whole jobs question is a very complicated one to predict. As with, there's no doubt that AI is going to bring changes and disruption. But I actually think if you look at the history of these things like internet and mobile over the last 10, 20 years, they also cause huge changes. But actually, whole new categories of jobs were invented. Actually, better quality jobs, higher paid jobs, and I think that's what's going to happen again with AI. I think it's going to change the job market. But I think in the fullness of time, I think it's going to create many more higher quality and better paid opportunities than we've had in the past.
That was the DeepMind CEO, Demis Hassabis, with Tom McKenzie at London Tech Week. And Tom McKenzie joins us now. Really fascinating deep dive with the DeepMind CEO there, Tom, into, well, the possibility of human extinction as a result of AI. What was he saying about AI in scientific discovery?
Yeah, Anna, this is it. They're weighing up, basically, the risks and the opportunities around this technology, and confining, at least defining the risks is proving very challenging. When it comes to the opportunities, Demis Hassabis, of course, a leader when it comes to the build-out of AI, large language models, and, of course, generative AI. He's much more focused and clearer in terms of where the upside comes through. So I asked him, is it likely that in our lifetime it's possible that as a result of artificial intelligence we could see the eradication of things like dementia and cancer? Take a listen.
I think in the next decade, I think it could be very possible that we could build these kinds of AI tools to help the world's experts and medical researchers make some fast breakthroughs in all of these types of areas, as we've seen with AlphaFold, where we've now used it to fold all 200 million proteins known to science. And we did that in just over a year on our computational system. So that kind of acceleration, and we like to call it science at digital speed, I think is going to come to a lot more fields, including medicine.
So it's the allure of some of those breakthroughs, some of the upside coming through from technology, from AI, that is keeping these executives focused and in the game, despite those risks, which, again, Demis Hassabis was said, were very difficult to categorise. And it's something the Prime Minister, sitting on stage earlier with the founder of DeepMind, also talked about: drug discovery, more accurate surgery. And the Prime Minister also said he wants to see AI deployed in schools for tailored learning. Those are the upsides, as, again, they weigh up these potential risks.
Tom, thanks very much. Bloomberg's Tom McKenzie with us there at Tech Week, and we'll be continuing our coverage of London Tech Week. Tomorrow, Francine Lacroix will be speaking to the UK opposition leader Keir Starmer about his vision for tech. The man who polls point to as the country's next Prime Minister. We will have a conversation with him for you tomorrow. That's at 9:30 UK time, 4:30 a.m. Eastern time if you want to get up early for that stateside. Coming up, a big week for markets with major rate decisions and data on deck. We will take you through it all. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, have fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
News breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. We are getting some breaking news, Anna. The NASDAQ is looking to buy Adenza for about $10.5 billion in a cash and stock deal. That, according to the Wall Street Journal. This is enormous. This would be the largest acquisition in the NASDAQ's history. It would also essentially mean that Thoma Bravo, which is the owner of Adenza, the financial software firm, would get a major stake in the NASDAQ as well. Really interesting crossover between the PE world, where you do, of course, have Thoma Bravo as a giant, into the idea of public markets. So something to keep an eye on. $10.5 billion, Anna, the largest acquisition in the NASDAQ's history.
Yeah, private markets, interest in public markets, really fascinating one. Let's get a look, Kriti, at the week ahead, and it's going to be a busy week, of course. The latest inflation print out of Germany, Spain, and the US. All of those break on Tuesday. US PPI data will be broken down on Wednesday, followed by the main event, the Fed's rate decision, of course. Then it's the ECB's turn with its decision on Thursday, and finally, the BOJ's rounding out the big week of central bank decisions, followed by Eurozone CPI on Friday.
Certainly something to keep an eye on. But look, just hitting our inboxes right now, Kit Jukes over at SocGen saying, well, it might just be the economic data that matters potentially more than the central bank story. We're joined now by Bloomberg's Simone Foxman, who's covering all of the stuff that we haven't talked about yet, which is the massive week for data. Walk us through what is ahead. What should we be paying attention to?
Well, we go from this sort of high-level perspective on the consumer and the economy to sort of this more nitty-gritty with rounding out the week with retail sales and with UMich consumer confidence. First off, that all-important CPI number for May expected to show that consumer prices are slowing in their growth. The headline number expected to come down to 4.1%, and the core number, stripping out some of those more gas, those sorts of things, coming down to 5.2%. That would be the slowest since November 2021. We're also looking at producer prices, where the headline is supposed to come down to 1.5%. So look, we have those consumer prices well above the Fed's target, but the producer prices a little bit different, and that's something we're following here particularly. You look at this chart where PPI is in blue, CPI is in orange. Producer price growth clearly slowing at a much faster pace than consumer prices. We'll see how the Fed comes out on that little tidbit as well.
Okay, and looking to the end of the week then, Simone, what is the data expected to tell us about the US consumer?
Well, we are expected to see U.S. retail sales slow. In fact, the headline number going to negative 0.1%, so a little bit negative there. But this is one we've seen jump around quite a lot, and I think it reflects this overall challenge to understand exactly what the consumer is doing. And one more complication here is that we got out from Wayfair a little bit of an update on what's happening this quarter. This is that online discount furniture retailer, and they said that year-on-year sales growth is actually slowing a little bit slower than they were seeing in the first quarter, or return to order growth. Again, this is just a challenge to understand exactly what the consumer is doing, even though we do expect to see retail sales slow a little bit.
Simone, thanks very much. Bloomberg's Simone Folksman with the latest on the outlook for US data. Lots more of the pieces of that particular jigsaw to be assembled as we go through this week. That puzzle coming together. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we're seeing more and more people say, I have to worry about me as a person, I have to worry about my family, I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
The market is willing to pay a premium for that scarcity of growth.
Barring some sort of crazy financial market event, I think that we should have a fairly stable move here.
Core is remaining really sticky, and it's really unclear that the trend lower extends.
The overall state of the economy is better. It's certainly much, much better than people expected it to be.
It's very possible that the recession slowdown, part of that has already, been brought forward if you want.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Price always leads sentiment. Live from New York City this morning.
The words of the wise.
Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Getting your week started with equity futures on the S&P, just about positive. Here come the upgrades. Goldman Sachs, David Kostin, raising their year-end S&P 500 price target to 4,500. Looking for something close to 5% upside, TK, from Friday's close.
We're going to see a lot more of this, and it's coming up into where we are. Every note this weekend says, look, here we are up 20% off the October low. Ben Laidler out front of David Kostin on enthusiasm for this market. But critically, as you say, John, they've got the same vision now to where we're going, which is sort of kind of like up, but we really don't want to reach out there.
The characteristics of this call as well, really important. The potential, Lisa, for this rally to broaden out, something I know that you were looking at through last week. Month to date, it's pretty clear. Outperformance on a Russell, outperformance on the regionals. TK, last week you asked, how are the regionals doing? Still on the mat, but trying to get up. And we've had how many weeks of gains now? Quite a few.
It's been 3 or 4 weeks straight of gains on smaller bank stocks. How long this can continue, it's anyone's guess. It's part of the parlor game. Right now, a lot of it seems to be predicated on the idea that the Fed is going to pause, whether it's hawkish or not, that they're not going to raise rates this week, and that also you aren't going to necessarily get any more banking collapses.
This month, the Nasdaq up almost 2%, the Russell up by more than 6%. Just to build on what Lisa said about the hope that we don't get more banking collapses, the regional banking index up 12%. So are we seeing a genuine rotation or just repositioning? Stuart Kaiser of Citi, Tom. Our sense is the move is more driven by short covering than adding longs. That's his take right now.
This is really important. We covered this last week, and Mr. Kaiser, I thought, was just a really huge value add from Citigroup. You're on the mat. You're down. The first bounce up is that. It's the gloom crew getting wiped out, and up you go one leg. And we've done that in the broader market. Certainly we've done it in the techs, and now we do it in the regional banks. It's the then what after that, which to Mike Wilson's point at Morgan Stanley, you got to earn the then what with some earnings stability. He questions that.
Morgan Stanley pushing back. Mike Wilson has not changed his tune for anyone who's tuning in and wondering if that's happened just yet. As far as I understand, Mike Wilson has not changed his view based on his most recent research. Marko Kolanovic of JP Morgan, he will no doubt publish a little bit later this week, and we'll see if he changes his tune a little bit later this week as well. If you are just tuning in, welcome to the program. Fantastic weekend of sport. Fantastic week ahead in the markets too. CPI tomorrow, then on to the Federal Reserve. Going into all of that, your equity market slightly positive on the S&P 500. Futures up by 0.2%. In the bond market, yields just about unchanged, up by almost a basis point. Lisa, here the 10-year, 374.91.
You're talking about the week ahead. Today, a bit slower into one of the bigger weeks of this year, particularly because it comes as the pivot point of all of the mid-year reviews come out. The rate decisions include Wednesday, the Federal Reserve coming out, Thursday, the ECB, Friday, the Bank of Japan. How much have we basically priced out additional Fed hikes, and what does it mean if they don't deliver? If, let's say, they do hike rates, or if, let's say, they don't hike rates and they say that they're not going to necessarily hike rates further, how much do they become sort of the bull market fosterer versus the bull market killer? Economic data, Tuesday U.S. CPI, Wednesday PPI, Friday Eurozone CPI. Very curious to see whether we see ongoing deceleration there. It might be more important, as Kit Duke said, than the Fed or any of the central banks. And in the politics sphere, we have to say this, that former President Donald Trump is expected to appear in federal court in Miami on Tuesday. He is expected to appear before a judge at 3 p.m. How much oxygen is this going to suck out of the room, John, as we all wait for a Fed decision?
It's in the recent polls.
Yes.
CBS, YouGov, that's the elephant in the room going into the campaigning for the election. 61% Trump, DeSantis 23%, Scott 4%, Pence 4%, Haley 3%. That's the latest poll, TK.
We'll talk about it. It's fluid to say the least. I would just like to say that the elephant in the room is tomorrow's inflation report. All of this discussion waits on a single statistic. Course, I never have said this. Course CPI, month over month, no other number matters. If it's up a tick, all hell breaks loose. If it's down a tick from 0.4%, all hell breaks loose.
Are you ready to pay skip, pause, hike, roulette?
Not yet. I got to wait and see the data,
Okay.
and I think you're going to hear from governors and presidents. They feel the same way.
John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management, having a better year this year, John. It's good to see you. Let's talk about it. We were discussing not just the headline movement, but whether this is a genuine rotation away from the outperformance of mega cap tech or just a subtle repositioning in the last couple of weeks. John, how would you characterize it?
Well, thanks for having me on, guys. It's great to be on surveillance this morning. I have got to say that where we are right now is beginning to see a rotation that carries on from the rally that began on October 12th of last year. We've seen information technology, communication services, and really take off in that period. But now you're seeing gains in industrials, materials, consumer discretionary as well in that space of time. And from there, we've seen the broadening into small caps and mid caps, which don't get much of a mention by most people these days.
John, I want to know, and congratulations on being in the market and participating. You absolutely nailed this. Somebody walks into OPCO today, an institutional investor. They've missed this market. What's the first thing they should do? What is the Stolfus action plan to catch up?
Well, of course, it depends upon all the intricacies.
For instance, they're to risk and mandate they have. But what we would say from the first level, the point of view would be in a broadening rally, you might want to consider some of the cyclicals that have yet participated or that have just begun to participate, and consider opportunities amongst growthier value as well as garpier growth, and we would suggest market capitalizations across both small and mid caps offer opportunities as well. And so we think that you may have missed some of the major move that occurred within technology, but technology was brutally abused last year, oversold on many levels, and we think that's why it led out of here, as well as the AI interest that came in March of this year.
John, you like financials, according to your note, and this comes at a time when a lot of people are sort of shrugging off the fears of March. What gives you confidence that we're past the worst, especially because borrowing from the emergency lending facility from the Fed last week rose to $100 billion for the first time going back to April?
Well, we think what part of it is, Lisa, that you saw a really fast response on the first tranche of the problems that emerged by the Fed, by the Treasury, and by the FDIC, increased oversight now by regulators, and the fact that we just haven't had really much news to the downside on this and the financials since March and early April, as I recall off the top of my head, which would tell me that they're likely, if anything else surfaces, it'll remain most likely idiosyncratic and the result of a tendency for either hubris or just disregard for basic principles of investing at any individual bank that shows up with a problem.
A lot of people speculate that bond markets are basically saying that stocks are wrong. There is one study by JP Morgan that says that stocks should fall by about 20% if you believe what the bond market is saying. There seems to be a dissonance. If bond yields rise materially and agree with the view that stocks are putting out there, is that going to kill the bull market?
We wouldn't think so, based on historical experience and our personal experience, over the last 40 years in these markets. Usually when you got a Fed funds hike cycle, of course, equities sell off in anticipation of draconian measures to occur within a Fed funds hike cycle. But once equities get an idea that this is not going to kill business, you begin to see the ability of equity prices to actually rise in periods where interest rates are high. We saw that in the early 80s, coming out of the bear market from the late 70s into 82, And going forward to 87, there were many times when interest rates were considerably competitive against equities, and yet equities were riding because of innovation, improvement in business, and just general economic improvement.
John, I hear you going over history there, and I wonder if history is helpful or confusing. I was looking at two quotes last week, and they came within almost 24 hours of each other. Savita Subramanian of Bank of America said, bye-bye bear. She said, the bear market is over. 90% plus of the time, the S&P 500 rises over the next 12 months after recovering from a bear. Daryl Cronk of Wells Fargo Wealth said, history shows SPX doesn't bottom until on average 6 months after the first Fed rate cut. John, which one is it, and how helpful is history?
Well, I think it would be the former rather than the latter. As Mark Twain used to say, history may not repeat itself, but it often rhymes. And it seems to be that both the resilience that we've seen related into job creation, as well as the ability for many companies to navigate this current environment and investor need for better returns if they're intermediate to longer term investors. What you're looking at, we think, are higher prices in stocks. Not necessarily up in a straight line in all sectors. You're going to see periods of profit taking. You get any kind of a catalyst for some selling without FOMO. That would create some excitement to the downside. But we think the overall movement is still headed out of the woods, and with fundamentals improving, likely to continue.
Hey, John, wonderful to get your perspective to kick off a Monday morning with you and the trading week ahead. John Stolfus there of Oppenheimer. Constructive on this equity market, and right to be so. He's been right all year. After having a tough year in 2022, TK, that market is going his way.
The tough year in 22 is the optimists like Pinky Chada we heard from, I believe it was Friday, with Deutsche Bank, or Mr. Stolfus with APCO, or I'm also going to add to this Gina Martin Adams of Bloomberg Intelligence. Yeah, you can be wrong in 22, but you're wrong simply because you have to be in the game to start the move. If you wait to go into the market, waiting for the move.
Are you speaking from experience?
You miss it.
Trapped in cash.
A little bit of experience here, folks, that when Mr. Stolfus speaks, I take notes. And the answer is, this is a huge difference with financial media and timing. These people are not timing. They don't have a crystal ball. They're like, you got to be in the game to play. And we're going to talk to a lot of those people through June and July.
We'll discuss the politics of the moment in just a moment as well. John Lieber of Eurasia Group on the former president's indictment. This from William Barr, who served as President Trump's U.S. Attorney General over the weekend, to Fox News. If even half of it is true, then he's toast. Pretty scathing words over the weekend, TK. From New York City this morning, good morning. Kicking off your trading week with CPI just around the corner tomorrow, and then on to the Federal Reserve on Wednesday.
Keeping you up to date with news from around the world with the first word, I'm Lisa Matteo. Former Italian Prime Minister Silvio Berlusconi has died. Berlusconi was a billionaire media mogul before becoming Italy's longest-serving post-war prime minister. His more than 9 years in office were marked by sex scandals and allegations of corruption. Still, he was one of the most influential figures in Italian politics of the last 3 decades. Silvio Berlusconi was 86. And part of a counteroffensive to take back Russian-occupied areas is underway. The Ukrainian military says its troops have freed another 2 villages in the eastern Donetsk region. Now, the claims haven't been verified, and the defense ministry in Moscow hasn't commented. China is denying U.S. claims that it has spy operations in Cuba. In Beijing today, the foreign ministry referred to the allegations by the Biden administration as false information. Over the weekend, the administration said the Chinese spy facilities in Cuba date back to when Donald Trump was in office. NASDAQ reportedly has agreed to buy software maker Adenza for $10.5 billion. That's according to the Wall Street Journal. The Journal says that Adenza's owner, private equity firm Thoma Bravo, will get a large stake in NASDAQ as part of the deal. Adenza makes software that's used by banks and brokerages. And UBS has completed the acquisition of Credit Suisse. It's the biggest merger in banking since the 2008 financial crisis, and it creates a global wealth management titan. UBS agreed to take over Credit Suisse in March in an emergency sale brokered by the government. Now, a confidence crisis and a flood of client outflows put Credit Suisse on the verge of bankruptcy.
Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment.
And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
This vicious persecution is a travesty of justice. You're watching Joe Biden. Joe, I think of it. Biden is trying to jail his leading political opponent, an opponent that's beating him by a lot in the polls.
Former President Donald Trump speaking at a rally this Saturday in Georgia, defending himself against the historic federal indictment filed against him regarding his handling of sensitive government records. His U.S. Attorney General William Barr, under his administration on Fox News Sunday, said this: "I was shocked by the degree of sensitivity of these documents and how many there were. And I think the counts under the Espionage Act, that he willfully retained those documents, are solid counts." TK, he finished with this line: "If even half of it is true, then he's toast."
Huge deal, and really leading with the headlines, and it's obviously who this comes from, and the former president will be very defensive about it. And I really think it goes to the nuance of the weekend, is this primal screen, that this is so different than the other process we've seen leading up to Tuesday. And to me, Tuesday, the huge thing is, what will this judge do appointed by President Trump? To me, that's my focus on Tuesday right now.
Lisa, what's your focus going into tomorrow?
My focus is on potential unrest. My focus is on the police presence. My focus is on rhetoric like Kari Lake, speaking at a Georgia State GOP convention on Saturday. Basically, she was the one who lost a bid to be governor of Arizona. She said, if you want to get to President Trump, you're going to have to go through me, and you're going to have to go through 75 million Americans just like me. And I'm going to tell you, most of us are card-carrying members of the NRA. So this is the kind of tenor that we have in the rhetoric coming into tomorrow.
We did have a poll over the weekend from YouGov and CBS News, a poll that we'll reflect on repeatedly through this morning. One of the questions that people were asked: how might they change their view of the former president? This is likely GOP primary voters. These were the results: 14% for the better, 7% for the worst, 18% depends, whatever that means. And this one here, Tom, 61% won't change.
Yeah, well, this is the politics of the moment, and he's got his crew. I don't know if it's 74 million people in support of him, but it's an awful lot of people in those polls. And to me, who's number two? DeSantis?
Right now, yeah.
And it's like 20, right? It's like sort of kind of.
You've got the former president in the 60s. You've got the governor of Florida in the 20s, and then it's like low single digits. Scott, 4 Pence. Haley's in there as well.
This is going to get a lot more complex, and I think we'll learn day by day here on far more serious charges, perhaps, than what we see in New York. John Lieber is expert on this. He's United States Managing Director at Eurasia Group and joins us for a Monday brief on an historic Tuesday that we will see tomorrow. Bloomberg, and particularly Balance of Power, will have full coverage of this. John, thank you so much for joining. What's this judge going to do tomorrow? She's a Trump appointee. You know her. You can brief us on who she is. What will she do?
You know, this indictment is historic, as you mentioned, and we've never seen anything like this. And there's a whole host of considerations when you're looking at a high-ranking political official like President Trump that just aren't going to be in play with other people. The publicity, there's a major security concern. But, you know, I think we saw his indictment in New York. In many ways, it was pretty normal. You know, the Secret Service walked him in. They had an arrangement. So Tuesday to me isn't the really important date. It's what happens over the coming months and the kinds of decisions that she'll be making to either admit evidence or exclude evidence, and how she instructs a jury if one ever comes together. There's a lot of really complicated legal questions here. And the key question to me going forward is, how do you find an unbiased jury for the most famous man probably in the world? Everybody in America has thoughts on this guy, and probably most people have exposure to this case. There's going to be a lot of tough questions for this judge going forward.
Well, this is Eileen Cannon of Miami in the federal court. Are those decisions going to begin to be made tomorrow?
They'll be made. I mean, this trial is going to take probably months to unfold. The government said they want a speedy trial, and Trump's MO in the past has been to drag out these legal proceedings as long as he possibly can with procedural motions. I can't say if we think that she has a more favorable view of Trump's procedural motions or not. There's just a lot we don't know. In the past, she has made some rulings that are favorable to the former president. But, you know, at this point, I would give her the benefit of the doubt. But her ability to fairly conduct a trial and fairly indict the president is going to be a key thing to watch going forward.
John just read the poll numbers in terms of Republican candidates, Republican voters who are likely to continue to keep their support with the former president. Are you surprised by that? Are you surprised by either how much of the proportion of people are not going to change their opinion versus those that are actually considering one way or another what this does?
Sadly, no. I mean, Donald Trump's been survived just, being political flamethrowers that would have just absolutely scorched any other politician over the last 8 years. And, you know, you look at this relative to the Access Hollywood tape or the fact that he just lost a civil suit for sexual assault. I mean, there are some really serious things this guy has done that have not touched his approval ratings at all among a really hardcore base of the Republican Party. And now he has the opportunity to say that the president of the United States is bringing a political prosecution against him. And there's people like his rival, Vivek Ramaswamy, and other Republicans who are out defending him. So I'm not remotely surprised that he's able to spin this to his benefit. If I'm one of the Republican challengers that's hoping to get into the news cycle here, I'm hating this, because this just gives Trump the opportunity to be the #1 storyline. All the questions you're going to be asked are about President Trump. And this election is fundamentally going to be about his role in the party and his role in the country, because he's going to be so dominant going forward.
From an international perspective, I think about some of the allies looking at the U.S. right now, and the fact that this is going on, which is unprecedented, and the fact that there is such fiery rhetoric and potential threat surrounding tomorrow's court hearing. What does that do to the U.S. relationship with its international friends?
Yeah, I think the big challenge to the U.S. right now is that it looks a lot like some other countries that we've criticized quite a bit in the past. And I think that the great things the U.S. has going for it are the strength of its institutions, and that includes both the courts and law enforcement. So the fact that you have half the country believing that law enforcement has been fundamentally corrupted and delegitimized, and that message is going to get out and resonate around the world, it really undermines faith and belief in U.S. institutions, not just domestically, but globally. And that's a bit of a problem when you look around the globe at countries like El Salvador or other places where you might start to see democratic backsliding, and the U.S. doesn't really have the ability to step in and criticize anymore. And in some cases, it's not even trying.
John, I wonder if it's something more specific as well. If you're a U.S. partner right now in the West, a European country, the UK, for instance, are you questioning how you share intelligence with the US if this is what happens?
I don't think there's a belief. I mean, Joe Biden, yes, he had some boxes in his garage. The National Archives found out about it. They came to take him back. I think that Trump is a bit of a unique figure here. However, the U.S. does have a broader problem with intelligence leaks. I mean, you've got this National Guard, very young guy, who was leaking these documents that is now doing quite a bit of damage. So when it comes to the national security, the actual documented damage to national security that we know about, so far, the Trump documents, while his actions were quite bad, don't come close to some of these other cases. And I don't know if this case in particular pushes the allies away from the U.S. over that issue.
Interesting. John, thanks for your perspective. Appreciate it. John Lieber there of Eurasia Group. Going into truly a historic week. Tomorrow, Tom, it really starts in many ways on both the political side and the market side. This country, though, TK, my experience of it over the last 8 years or so, just totally desensitized to some of this because it has been a constant crisis. Year after year, there has always been something which has led some people to believe that maybe this isn't one either.
I was reading about Prime Minister Johnson this weekend and his exit from the Conservative Party.
Sure.
And it seemed tame compared to, as you say, the way we bounce around here. I mean, and there's a real exhaustion about it by liberals and conservatives and a huge body of the public in the middle. I think we're just all exhausted out by the debate.
And some people, Lisa, for that reason, overlooking the seriousness, potential seriousness of an indictment like the one that was unsealed going into the weekend.
And the other potential opponents in the Republican race coming out to back Trump.
Oh, they don't know what to do.
Yeah.
They don't know what to do.
Correct.
I imagine if you're Governor DeSantis, maybe with the benefit of hindsight, you would have waited a couple more months before throwing your hat into the ring. From New York this morning, good morning. Future's positive.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes, or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Live from New York City this morning. Good morning to you all as we start a really interesting trading week. Looking ahead to CPI inflation data coming up tomorrow morning, then on to the Federal Reserve on Wednesday. Going into all of that, your equity market just about positive, up by 0.1%. The longest weekly winning streak of the year so far. In fact, the longest weekly winning streak going back to August of last year. The S&P 500 closing out last week for a fourth week of gains and adding the tiniest bit of weight to the rally this morning. Some people think it's going to go much further. Goldman Sachs with an upgrade over the weekend. They're looking for something like 4,500, an upgrade from 4K. That was their previous view into year end. And I think beyond sort of the headline number, they're looking for this rally to broaden out beyond the NASDAQ. And over the last month to date, for the month of June, the NASDAQ underperforming the Russell. This morning, the NASDAQ outperforms on the session. We're up by 1/3 on the Russell, up by 0.1 Tom.
Very quickly, oil. I will look down at the screen. First look today, $67 a barrel. West Texas Intermediate was like, oh.
Jeff Curry downgrade. You see that?
Yeah.
Yeah.
And it's a little bit, it's off the topic right now, but nevertheless, oil 68.46, Brent crude 73. Can you imagine a $69 Brent crude? How does that play in Riyadh?
They're not far off, are we? Yeah. I don't think Riyadh is too happy right now based on some of their recent communication. Check out the bond market, 2-year, 10-year, 30-year. Over the last week or so, yields drifting higher. The 2-year higher by about 10 basis points or so. The 10-year up by 5. All of this going into the Fed. 459.81. Yeah. Tom, I think we can call that 460 at the front end.
And critically, the 2-10 spread at 86 basis points of inversion. Folks, for those not keeping score at home, that's a big deal. We are buttressed right up against max inversion on a moving average basis. If you get a week or 2, 3 weeks more at this level, that's really germane.
Interesting to see how the equity market might connect with what's developing in the FX market. Just to finish on the euro, as you start to get some cyclical outperformance domestically in the United States of America, you start to see the Russell outperform the small caps, the regional banks again. The euro just showing a little bit of strength, squeezed out a week of gains on that currency pair against the US dollar, and right now 107.80 is where we stand on that currency pair into the Fed on Wednesday, into the ECB on Thursday. A little bit of a stronger euro here, a softer dollar.